So, who am I? First things first, my name is Nabil. You might have seen my YouTube channel. Some of my videos have blown up. I'm kind of known to give everything away. I give away any strategies that are working for me at the time. If I find a new method to copy trade people, so on and so forth, I always give them away. And so many people have made a bunch of money from my strategies, and I'll show you some of the results a bit later on. Now, I want to tell you a bit about my story, and the reason I'm telling you this now is so you can understand the magnitude of this opportunity at this current point in time. First of all, 2019, I was a criminal. I got arrested multiple times. I was just on the streets doing things I shouldn't have been doing. 2021, when I was 19 years old, I started my first business, and that was after multiple trials in different avenues. I tried Forex, I tried dropshipping, I tried Etsy, I tried so many different business models. None of them worked. Managed to finally crack the code on a particular business, and I managed to succeed. And 2023 to 2024, mind you, this is before crypto, before Memecoins, I ended up buying my first sports car in cash in full. As you can see here, £43,000 paid, which I think is around like $70,000 for the C63S AMG. And as you can see from a screenshot here, in 11th February 2024, I was making some decent money, 27k in 1 week and literally 6k in 1 day, and that's in pounds, so in dollars that's about 35k USD. And the reason I'm showing you this is to show you I'm not one of those guys that's going to sit here and lie to you and say, oh, Memecoins changed my life and so on and so forth. Don't get me wrong, it did, but that's not the point of this video. The point of this video is for me to show you why I went from someone who was already somewhat successful, dropped everything that I had at the time and went all into Memecoins, and why you should probably do so too. Now, the reason for that is because there is nothing else like the Memecoin space where there's so much upside with almost no friction, right? There's no other space where you can turn $100 into $10,000 in the space of a few hours, or get into something and within a week or a month or 2 months, you are making consistent income over and over and over again in the tens of thousands as someone who only had, a few $100s a few weeks ago, right? And this is me in 2025/2026, where I'm living the life I want. I'm driving the cars that I want. I have a daughter, I have a wife, I've moved to Dubai, and life is great. And the only reason I've been able to do this is because I've gotten into opportunities at the right time and not waited for everyone else to get in before I do. Now, you might think you're too late to the Memecoin space, because truth be told, we've been around for quite some time now. But the reason I'm recording this video is because right now, while the market is down at the time of recording this video, is the best time for you to get into it before it picks back up, okay? Now, you're probably asking, will this actually work for you? So let me answer a few questions to you. Does this work for beginners with no trading experience? Absolutely. And that's exactly why I'm releasing this free course, because I want you to know all the basics, all the foundations, all the fundamentals, so you have no excuse in becoming an experienced trader in the Memecoin space. What if I barely have time? Well, guess what? I barely have time, right? I don't even trade up to 2 hours a day. So even if you don't have 2 hours a day, you can still make a substantial amount of money. And lastly, what if you don't have money? Right? You're probably thinking to yourself, I only have $50, I only have $100, or maybe you only have $1,000 and you think it's not enough compared to what other people are trading with. Well, why don't you ask any of these guys? First of all, you've got DebChart. This guy came to me with 30 euros to his name. 30 euros within a matter of months, and I documented this all. If you go into my Telegram, you'll be able to see all of this documented, all of this shown to all of my members over time. He made $40,000 over a couple of the months. He then went on to buy 3 exotic cars over the span of the past year or so. An Audi TT-RS, he went to buy a Porsche Cayenne, and he also bought an Audi Q8. If you want to pause the video and have a read of some of our conversation, you can go ahead and do so. Next, we've got Deck, who literally made his salary from trading Memecoins inside the crypto house. As you can see here, Deck is literally making a salary from Memecoins. This is after he showed some of his income from Memecoins, and then he literally said this group really is something special. So that's for you guys who are thinking, oh, but I don't have time, I have a 9 to 5, so on and so forth. Well, if Deck could do it, surely you can, right? Then we've got another member who bought a $120,000 Audi RS6, all of profits from not multiple coins, from one single coin. Right? What a beautiful car. And then we've got one of my close friends who also made $300,000 from one coin, while his friend made over $1 million. Again, you can pause the video and have a read through our conversation. And then we've got someone who's called Mr. RTD. Now, bear in mind, a lot of people in the crypto space don't actually like to use their actual names just for privacy purposes. But this person here joined my group with 10 Solana and managed to turn it into 100 Solana in under 24 hours. Another 2 members, one who turned $530 into $10,000, and then another who turned $2,500 into $77,200. Jazz, who doubled their crypto portfolio in just 3 days. These results are unheard of in any other group, in any other space. You can't do this fast with such a lack of resources in any other space. And then we've got, some kind words from Wild Bill here, where he said, all of you guys are great and so helpful to those of us who are new. fast forward to what this person said. He said, yeah, a lot of crypto spaces aren't friendly to new faces. They expect you to know already. This is not the case in what I run, right? The whole reason as to why I'm putting this video out there and why I've started the groups that I've started is because I want people to get into crypto, even if they don't have the necessary resources or the necessary knowledge or experience to get into it. So if you want to see more of these results, by the way, I can't, fit them all into this video. There's about 500 plus. You can go to my Instagram, Nabil Talks, and you can just watch through these highlights. Now, this is your chance to do the same. And the best part is it's completely free. I know you don't need to put in your credit card either, as you can probably tell. All you need to do is watch the rest of this video and you'll be able to see exactly what it is that I do when it comes to trading meme coins. And if you do have any questions, you can always join the school community that is below in the description. That's where you can get access to the resources as well. And there is an extra module that I wasn't able to fit into this video just because I wanted to release this as soon as possible, and the processing would have taken way too long to do so. So if you want access to that, just click the link and just join. Again, completely free, and you'll get access to all the slides. You'll be able to ask me questions as well. Oh, and one more thing, I actually hid something in this video where for the first person who finds it, they will win $500. Yes, 500 USD for the first person who spots it and messages me. If you think you found it, message me on school, which is the link in the description, and I'll tell you if you won or not. Other than that, enjoy the video. Welcome to this first module where we're going to be going over how to understand charts. Now, regardless of what kind of trader you are, you need to understand what's going on when you see a screen like this. A lot of the time when people trade meme coins, they tend to think that it's all about narratives, trends, or who tweeted this or what's currently going on in the market. And that is far from the truth. If you don't understand how to read charts and you don't understand what a chart is telling you, you are not going to be profitable. And if you are not consistently profitable, and you've had experience in the meme coin space, it's likely because you don't understand charts. I'm talking everything from trendlines to common patterns, even to small things like understanding candlesticks. Okay, so whether you're a beginner or experienced, I still recommend you to watch this section. Again, you can put this video on 2x speed if you want, just for you to speed up the process. Just make sure you take notes. So let's get into it. So first things first, when it comes to understanding charts, you need to understand the most important aspect of it, which is candlesticks. Okay, so before I dive into the specifics of a candlestick and explain what everything written on the screen means, what you first need to understand is what one candlestick represents. And what one candlestick represents is a time frame. So I'll just quickly show you what I mean. So if you go onto anything like Dex Screener, Axiom, or whatever trading platform you use, you'll notice that on top of every single chart, there's these time intervals here. There's 1 second, 1 minute, 5 minutes, 1 hour, and even if you press this little arrow down here, you'll get a lot more options like 30 seconds, 15 seconds, so on and so forth. And what this basically does is it changes what one candlestick represents. So for example, as you can see, the blue is 1 hour, and that represents that basically means that each candle here represents an hour. Okay, so as you can see here, it's the 6th of March where this line is, and it literally goes to the 3rd of March, 4th of March, 5th of March, because each candlestick represents an hour. Now, I want to show you the differences in charts when you change the time frame. So this is a 1 hour time frame, right? As you can see here, I don't know how much time this represents, but if you want, you can pause and kind of count the screen. Maybe it's like 20 hours or something like that, right? But I'm going to show you like the same section of this chart, but on a different time frame, just for you to see the difference, right? This is 1 hour. This is 50 minutes. Same chart, same amount of time, just different perspective of it, right? And then this is the 1 minute, right? So as you can see, it almost tells a different story on different time frames. Like if you saw this, you would think, oh, you know what, this coin is going up, right? It's in an uptrend, which we'll talk about later on, but oh yeah, it's in an uptrend, right? Whereas if you look at the 15 minute, then you start to think, oh, you know what, it was actually in a downtrend, and then kind of looked like volume was dying out. Again, if you are a beginner and you don't kind of understand what I'm talking about right now, don't worry about it. And then, it started to consolidate, it started to go sideways. This isn't really that clear to me. Again, tells a different story. And then you've got a 1 minute time frame, which again is a completely different story. Very similar to the 15 minute, but again, you've got like an uptrend here, then it consolidates here for a bit. You could even count this as a downtrend right here. Again, it goes down here, back up here, down here, so on and so forth. So many differences between the time frames, and don't even get me started on a 1 second time frame, which would be crazy. Like imagine like this time frame right here, you can see represents maybe about 20 hours, right? So look how many candlesticks there are for 20 hours. So imagine a 1 second time frame, right? Now, whether you use 1 minute, 50 minute, 1 hour, really depends on what you are trading, and that's something that we're going to go over later on in the program. But you do need to take into account the different time frames. And what I notice a lot in this space is people tend to only stick to one. People tend to only stick to the 1 minute time frame or the 1 second time frame or whatever it may be. Barely anyone ever changes from time frame to time frame. Which, don't get me wrong, you shouldn't overwhelm yourself with too many time frames, but you should certainly understand the differences between them and when you should use them or when you shouldn't. Okay, so let's get into the difference between the candlesticks, right? So as you probably know, there's red candlesticks and there's green candlesticks. So first we'll touch on the green one and what it means. Okay, so obviously pretty self-explanatory, but if we look here, green means we're going up, right? Pretty simple. There will never be a green candlestick unless you change it in settings. There will never be a green candlestick where the chart is going down. Okay, so every green represents us going up. Now what I want you to notice is what's written up here. Okay, so this is actually, hold on. So as you can see here, it has the word open and close. And essentially what this means is where the candlestick opened in price and closed in price within the time frame of this candlestick. Does that make sense? So let me explain. Let's just say a minute is what represents this candlestick, right? Essentially what this green body is basically where it opened, so as you can see here, and where it closed within that time frame. So for example, let's just say this was 47 million and this is 42 million, for example, right? This opened at 42 million and it closed at 47 million by the time the minute was over. And then if we move on to the next candlestick, which is this one, same thing. It opened at 47 million, closed at, let's just say, 55 million, right? That's essentially the body of a candlestick, okay? As you can see here. Now, you've then got these black lines here, which are called wicks. So that's W-I-K or W-I-C-K. I actually can't remember. Yeah, let's just say W-I-C-K. And essentially, what that means is within that 1 minute, where did that candlestick go on both ends, right? So remember, these two are where it opens and closes. So literally, where it started on 0 seconds and then where it closed on the 60th second. Remember, this represents 1 minute. So these two parts of it are literally just where it was on 0 seconds and where it was at 60 seconds. These black lines are what it did within that minute, okay? So for example, this candlestick here, which represents, this one in this example represents an hour, right? Within that 1 hour, it managed to go all the way to about 62 million. And it also went down to about, whatever that is, 56 million. Sorry, 46 million or 45 million, right? But then it opened and closed there. Hopefully that's making sense so far, okay? By the way, if you have any questions, you can always feel free to ask me, okay? Now, same thing with the red, but the complete opposite, okay? Where obviously because we're going down, now the open is at the top of the candlestick. Remember, this is the body, right? This thing right here is the body. And essentially, right, let's just say again, this represents 1 minute. As soon as that minute starts, this is where it opened, right? Let's just say this price was 1 million market cap. Now, if you don't know what market cap is, maybe you're a beginner, I will explain later on. But let's say this opened at 1 million, or even if you want to make it easier for yourself, let's just say this opened at $1, right? Let's just say this opened at $1, right? Essentially, now, within that minute, let's just say this coin went down and then back up and then down and back up. By the time it's the 60th second, this is where it closed, which is, let's just say, $2, right? That's where it closed, okay? Now, again, the black lines just represent what it did within that minute, okay? So again, if we go back to an example, like here, for example, this red candle right here, as you can see, it opened at around 59 million. It closed around 55 million, right? Or 56 million. But look what it did within that 15 minute. Remember, we're on a 15-minute time frame on this example. Within that 15 minutes, it went all the way down to about 45 million. But again, because the 15 minutes didn't finish by then, it didn't close down here. It closed up here at the end of the 15 minutes. Okay? And this is why it's important to actually be aware of different time frames, because you get a totally different picture on different time frames. Like here, you can see that the candlestick that went all the way down to like 45 million is actually a green candlestick, whereas the one on the 15-minute time frame is a red candlestick. So again, a lot of people look at this as negative, a lot of people look at this as positive, right? Always good to have different perspectives, okay? So that's essentially what a candlestick means. And as you can see, you can go ahead and go into any chart. So I'll actually show you an example right now of me doing this. You can go into any chart and you can literally pick different time frames. So you can even go to the daily time frame. So there's a coin called Testicle, for example, all right? As you can see, one candlestick represents 1 day. 25th of March. Another candlestick represents 24th of March, 23rd of March. So just to quickly, again, give you that explanation. This candlestick right here opened at 5.59 million market cap, right, where that blue line is, and it closed right here at 9.09. Okay, let's actually draw some lines for you to see that. So it closed here, opened right here. Okay, as you can see, opened here, closed here. But within that day, it also managed to go up to about 9.8, which, as you can see, this green line right here. But then it closed here. Okay, pretty self-explanatory, so easy to understand. Okay, so back to the main picture. As you can see here, now that you know what these things mean, as you can see, the real body is this green and this red, right? It opens up down here for the green, closes up here for the green, opens up here for the red, closes down here for the red, right? And these black things are called wicks, okay? So if anyone was to say to you, oh, it wicked to about 12 mil, it just basically means that it managed to just quickly go up to 12 mil, but it doesn't mean it closed there, okay? That's about it. So if you have any questions to do with candlesticks, do let me know, and I will see you in the next video. Take care. In this video, we're going to be going over support and resistance. So it's a pretty simple concept. Just make sure you take notes. If you are experienced, it's going to be a pretty short video. You can put it on 2x speed if you want. So let's get straight into it. So what I like to compare support and resistance to is basically just a floor and a ceiling. Think about it as an apartment building, right? Essentially what a chart does is it tries to break through the ceiling of the current apartment it's in into the next apartment, right? And then obviously when it goes into the next apartment, that apartment is obviously going to have a floor. And what that basically does is it uses that as the new floor. You could say it's walking on that floor, whatever it may be. Now, sometimes obviously it goes the other way where it will fall through the floor. Maybe there was a hole in the floor. That's how I personally like to compare it to, just to make it easier. And you need to understand that in this space, we do actually use the term floor, right? So if anyone says like, oh, the floor is 5 million or the floor is 2 or whatever it may be, it basically just means that the support is 5 million, right? So basically this number here is 5 million. Now I'm going to explain exactly what this all means, right? Essentially what we describe support and resistance is where the candles or where the chart essentially is repeatedly bouncing off, and it's essentially a range where the chart is staying between, right? So as you can see, this is a range, like this length of time. Let's just say this represents, I don't know, an hour of time. This is a range where the chart has essentially bounced off a certain point and bounced off another certain point within that. That's what we call support and resistance, okay? So I'll show you a couple of examples just so you know what I mean. In fact, let's start off with this particular example, where as you can see, first it bounced off the ceiling right here, and then it bounced off the floor, bounced off the ceiling, and then bounced off the ceiling again. Now, it doesn't need to bounce every single time. It just basically means, is there a clear ceiling where this coin can't actually break past? And as you can see with this particular example, there is, right? It's literally this point right here. It literally can't break through right now. Same thing with the floor. As you can see, it just keeps touching the same point over and over and over again, right? Now, one thing that tends to happen is when that coin does eventually break the ceiling, and the reason why I said again apartment building, that ceiling tends to become the floor. And that's why we call it, again, support and resistance. So what you'll notice is the former resistance, which again, remember, is the top, so this line right here, becomes the new support, okay? So again, remember, I like to compare it to apartments. Let's just say this apartment, there was an apartment here, and now you're in a new apartment. This apartment might be a bit bigger, it's a penthouse, I don't know, I don't really care, right? Point is, you are just breaking into another apartment, okay? So as you can see here, it broke through it, and now it started to create a new floor, which is here, right? And obviously, again, if this wasn't, let's just say you actually didn't see this chart at this point. Like, let's just say you're looking at this chart and it's only gotten to here right now. Hopefully you can see that line. You would think that this is the new support, which you'd be right to say until it creates a new one. And again, it needs to constantly bounce off it. At least 2 bounces for you to determine that it's a support. Because again, you could have thought this was a support, you could have thought this was a support. Doesn't necessarily validate it. It needs to bounce off it at least a couple of times for you to determine. Because again, even this line at the top where you would think, okay, cool, this is the resistance, before these candlesticks came about, right? Let's just say these didn't even exist, right? Let's just say we're not even looking at that. What would you think is the new resistance? You'd probably think this, right? You'd probably think here, because look, technically this was the resistance at one point because it was bouncing off it, and it bounced off it 3 times. So to be fair, I would probably even say this was the resistance, right? And then it actually broke it, and it now created a new floor, right? Which is here. And now you could say, again, this is the new floor, this is the new resistance, right? There's a new support, there's a new resistance. Now, what I want you to also understand, right? The reason why you wouldn't really want to do such thing that I just did, where you're basically trying to determine a support and resistance off of just 5 candlesticks, is it's not enough information for you to validate it. It's not enough information for you to determine whether it's a support or resistance, and it also depends on the time frame. So let's just say each candlestick here represents, an hour, right? This isn't 5 candlesticks, although it's 5 hours, isn't enough to determine whether it's a support or resistance if you're trading on the hourly time frame. Because if you're trading on the hourly time frame, the likelihood is you're trying to trade long term. You're trying to hold on to the coin for days, maybe weeks, and that's why trying to determine whether this is a support or resistance isn't really valuable to you, because it's just 5 hours. You're planning to hold it for days or even weeks, so it doesn't tell you much information. Whereas if you went into the minute time frame, this 5 candlesticks will turn into 300 candlesticks, and it would probably give you a bigger picture, telling you that, yeah, this is cool, this is actually a support and resistance, and it would make sense for you. Okay, so remember, support and resistance also, like how you determine a support and resistance depends on a time frame, and whatever time frame you're on, make sure that there's a significant amount of candlesticks for you to determine whether it's support resistance. So don't just determine of 5 candlesticks, you have to determine of many, right? Different time frames are going to tell you different things a lot of the time, and I'm going to show you examples as well in a second. Okay, so as you can see here, this is a coin, right? Right now we're on the 15-minute time frame. As you can see, it says 15 minutes right here. And what I want with this video is to get you to a point where you can literally just spot support and resistance without even needing to think, right? So me just looking at this at face value, I can already see where the support and resistance are, right? In fact, I'm going to let you pause the video and just try and have a look at where you think the support and resistance are, and let's just see if you actually do the exact same points as me, okay? So hopefully you've done it by now. Let's see. First one I would say is this one right here. As you can see, it tends to bounce multiple times. First of all, it broke this little ceiling here, and then you've got bounce here, bounce here, bounce here. Okay, this is the support, which then leads me to say what the resistance is, which is here, right? Because as you can see, it was bouncing a lot at these points right here. So I'd say this is the first support, this is the first resistance, and then as you can see, it broke that resistance, and I'd say this created a new support, this created a new resistance. However, again, because we're on a 15-minute time frame, I wouldn't call this a valuable support and resistance to know of, because it only bounced once off of here anyway. It would give you a better picture on the minute time frame, but not on the 15-minute. But this, if you said this was a support and resistance, you're correct as well. Once it broke that, it created a new one here, as you can see here, and this one, it actually bounced twice off each one. As you can see, 1, 2, bounced twice off the resistance as well, 1, 2. When it broke that, again, there are different supports and resistances here, but there's only one that really matters, right? So if you said, okay, cool, this is a support and resistance, right? You're not wrong, but you are wrong in focusing on that on this time frame because of how short of a time span it is. Instead, you need to look at a bigger picture where the support is, again, where the resistance was before, as you can see, because look, it bounced off here, which was the previous resistance. So the support would have been this, and then the resistance would be where it's bouncing off of multiple times, 1, 2, 3, which is 18 million, right? So this is the new, sorry, 1 second. So this is the new resistance, right? This is the new support, okay? Now again, this is why I say to you, timeframes matter a lot as well, because you can probably find a lot of different ranges of supports and resistance within this. For example, we can find one right here, as you can see. If I look closely, let's see if we can find another. You could probably even say like this one right here at the bottom, right? That's another one. And you could probably even say this one right here, okay? But again, these don't matter on the bigger time frame. You need to only determine supports and resistance on a big range of time, okay? So again, let's just give a random number of candlesticks. Ideally, at least like 20 or 30 candlesticks for you to determine, right? The more, the better, okay? So as you can see, a bit more solid lines for you to be able to determine it. This one's a proper support and resistance, and then this one's also a proper support and resistance, okay? Let me show you a quick live demonstration of what this looks like. So as you can see, we're on a coin called Testicle. Now, if you look here, let me ask you a question. Ignoring this part of the chart, do you see a support and resistance here? I'm assuming your answer is going to be no, right? There's nothing really that gives you support. If you said this and this, you're wrong, because again, it only bounced once, it's not enough, right? There's no support and resistance right here, okay? Now look at the difference if we was to go on the hourly time frame, right? Instantly, just by changing the time frame. So let me actually go back for a sec. So just to show you how long this represents. So from 16th March to 25th March. If we go to the hourly time frame, we go from 16th March to 25th. So 16th is here, 25th is here. We can instantly see a few supports and resistances, right? So as you can see right now, we've got this little one right here, which again is not really valid because of, again, the time frame that we're on. But one significant one that we can see is, first of all, we can see this one right here, right? It bounced off here a lot as well, as you can see here. So this is one. You can also see this one here as well. And then even if you want to look at like the bigger picture, there isn't really a solid one right here in terms of the bigger picture. There's only small ones, but like you could technically say, if we go on to like the 15-minute, let's just see. Okay, there's not really a bigger one. Like I wouldn't call this a support because it only bounced off it once. Here, I wouldn't really call that either. Again, you'd probably have to look at the like smaller ones. So as you can see here, for example, this is another support and resistance. Okay, but again, you need to understand time frames make a big difference. Okay, as you can see again, like there's a huge support and resistance right here, as you can see here. Right now, you're probably wondering like, you know, how do you determine what a support and resistance is for something like this, where like, you know, it's bouncing out of it a lot. A coin can always bounce out of its support and resistance, but it's only broken when it starts a new trend outside of it, right? So for example, as you can see, it bounced out of it here, but it came right back in after, right? Yeah, it stayed out of it for, I don't know, a couple of hours, but it bounced right back in after, right? The only time it matters is when it does something like this, where, look, it bounced out of it, and then it continued on a downtrend out of the support, okay? That's when it now matters, right? Same thing over here, as you can see, like it came out, and essentially what it's meant to do here, if it was to break this resistance, is it needs to go into an uptrend, right? Or at least it can potentially consolidate, right? But what it did here is it just literally went up. It was not able to form a new high, right? And then it ended up going back into the zone, right? So again, you need to determine based on like the macro, right? Not these micro little candles that come out and so on and so forth. Like you wouldn't consider this any resistance or support levels, but you need to consider these. So yeah, other than that, if you have any questions, do let me know. That's exactly what support and resistance is. In this video, we're going to be going over trend lines. Trend lines are essentially a simple way for you to understand the direction a coin is going in. So as you can see on screen, you've got different types of trends. You've got an uptrend, downtrend, and a sideways trend. And it's just going to be a quick explanation as to what each one is and how you can actually determine whether it is a uptrend, a downtrend, or a sideways trend. So let's get into it. So as you can see, the different trend lines, we've got uptrend, sideways trend, downtrend. Now, typically, or not typically, almost every single time, when a coin is in an uptrend, what it will do is it will create higher highs and higher lows. Okay, so you need to remember these terms. Again, it might get confusing for the first, I don't know, week, 2 weeks of you trying to understand these, but you need to understand that when a coin obviously goes up, it makes a higher high. It basically means that it's higher than the previous high. So obviously before this high here, the coin probably did this, right? So essentially, this is higher than the previous high, okay? And then is the low, where it goes down, higher than the previous low, okay? If it is, then the coin is in an uptrend, okay? You can think of it as a staircase as well. But again, remember, if the high is higher than the previous high, it is a higher high. If the low is higher than the previous low, it is a higher low, okay? And before I go into the sideways trend, I'm going to go into the downtrend. Same thing here, except it's the complete opposite. So for a coin to be in a downtrend, the high needs to be lower than the previous high, okay? So as you can see here, this high was up here, and this high is lower than it. So it's a lower high. And then you got the lower lows. If it's lower than the previous low, then again, it is in a downtrend. And then as you probably guessed, with the sideways trend, there's no higher lows, there's no higher highs. And a lot of the time, it's not going to look as perfect as this. It's actually going to be a lot more messy, where it's probably going to be like this, and then like this, and then, although that looks like it's basically going to be something like this, right? Now, again, depending on the time frame, it might look like a downtrend, but again, it all depends on the time frame that you're looking at. So if you actually, let's just say this chart that I just drew right here was an hourly time frame, then if you go to like the 15-minute, this will most certainly look like a downtrend. This will also most certainly look like a downtrend, okay? But again, because you're on an hourly time frame, you're probably trading on a longer time frame, so this doesn't matter, Okay, it only matters in the bigger picture based on the time frame that you're looking at. Okay, hopefully that makes sense. So as you can see, uptrend example, higher high, higher low, higher high, higher low, higher high. Okay, downtrend example, you got lower low, lower high, because again, remember it's lower than the previous high. Okay, and then again another lower high, and then obviously it'll probably go to another lower high, so on and so forth. Same thing with the lower lows. And then the sideways is just like this. Okay, now if I show you a real life example, if we go into this chart right here, what you can see is, if you watched the previous video, you'll know that we were talking about support and resistance. This is currently going sideways, as you can see, right? There's no actual uptrend or downtrends or anything like that. We're on the 15-minute time frame. Now, if you zoom in, you probably spot a downtrend, right? So you could probably say this is a downtrend, right? Or this is an uptrend, and so on and so forth. But does it matter on this time frame? Absolutely not, because look how small that little section is compared to the rest of the chart, right? So let me go quickly on a 4-hour time frame, right? I want to show you an example. Okay, so 4-hour time frame, as you can see, let's see. Okay, so 4-hour time frame, what you can see here is from the 16th of March to, let's just say, the 18th of March, you could pretty much say we're in an uptrend, right? As you can see, creates a higher high, and then higher low, higher high, higher low, higher high, higher low, so on and so forth. Okay. Now, if I was to go to the let's just say 15-minute time frame, I'm pretty sure it will show you a very, very different picture. So if you can see here, yes, we're still in an uptrend overall, but if you are trading in real time on the 15-minute time frame, or even on the 1-minute time frame, this will look like a downtrend to you. Okay, this will literally look like a downtrend to you. So again, let's just say, again, you're trading on 18th of March at 8 a.m. You would literally be looking at this chart going down for the whole day from 8 a.m. to about, 10 p.m. And again, because you're trading on the 15-minute time frame, it matters, right? But if you're trading on a 4-hour time frame because you're planning to hold on to a coin for days, this little section doesn't matter at all. Okay, so that's essentially what trends are. It's just literally the direction a coin is going in. And just a quick reminder, this is the different ways it goes. Okay, so if you have any questions to do with trend lines, let me know. Pretty self-explanatory. I will see you in the next video. In this video, we're going to be talking about chart patterns. Now, as you can see on screen, I've got a bunch of different patterns that I want to show you, and they're different patterns for different types of chart movements, obviously, right? And there's 3 different sections I'm going to be going over. One is continuation patterns, another is reversal patterns, and another is bilateral patterns. Okay, so let's get straight into it. Now, first we got continuation patterns. This is where essentially a coin is going to continue in the direction that it's doing overall, but it tends to do one of these before it does. Okay, now whether this applies to a lot of coins or not is a completely different topic, which I am going to touch on. But for now, I just want you to pay attention to how the chart is actually going to look within one of these patterns. So as you can see, for example, if a coin is going up and then it starts to form a pattern like this, the likelihood is that it's going to continue up. And again, you can draw lines like this on the chart, and I'm going to show you some examples later on. And basically what this is showing you what this is showing you to do is to set your stop loss here, your entry around here for when it breaks this zone, and then for your target, take profit to be around here. Now, obviously, a lot of these patterns stem from like the forex space and so on and so forth. So again, whether you want to take your profit here or not, completely different topic. Again, because with forex, a coin isn't going to move anywhere near as much as a meme coin, for example. But we both know full and well that, let's say, for example, this is $1 million market cap. This is going to be like 1.2 million or 1.4 million. That's not a lot, right? You shouldn't set your target take profit there. You should set a lot higher, depending again on the coin, depending on what this number represents. But again, just so you know, like, don't take these patterns as like don't treat them religiously, right? Take them with a pinch of salt, but you also want to have them in the back of your mind in case one of these form in a chart that you're looking at. So you've got falling wedge, you've got bullish rectangle, you've got bullish pennant, so on and so forth. You can just have a look at, you can pause the video and just have a look at them. And what's good for you to do as well is go onto some coins that maybe you've looked at in the past or that you're currently looking at, and see if you can spot any of these patterns. Now, one thing I will say is patterns tend to only be worth looking at on coins that have been out for a long period of time. I'm talking days or even weeks. A coin that's only been out for a couple of hours, if you see a pattern forming, the likelihood of it actually, following that pattern is going to be very, very, very low. Just because a lot of coins that are new, majority of its movement is unprecedented. It's happening because of narrative, because of trend, because of hype, and so on and so forth, right? Only when a coin's hype dies down, then you can start to apply these patterns to it, okay? So I'll show you an example, right? As you can see, we've got a coin called White House, which, as you can see on this example, it's been out for about 5 days. We're on the 15-minute time frame, and I don't know if you noticed, but obviously you probably spot a pattern right here. Now, for a lot of you that don't know patterns, you might have just seen this as a normal chart, right? But let me show you something. Look at this, right? Bearish rectangle, okay? And what you can see here is essentially it was going down, and then it's formed this little consolidation zone, and then it continued going down, okay? That's exactly what a bearish rectangle is. So again, something that you can do after this video or throughout this video is go and check the charts that you've been looking at. Again, coins that have been out for days or weeks, and see if you can spot any patterns, right? And then you've got reversal patterns. Reversal patterns pretty similar, but instead of them continuing in that direction, it's reversing. So as you can see here, it went up. It's going to do a double top, which is basically hit the top twice and then go back down. Right, so it's going the opposite direction. You've got another one that's pretty popular, head and shoulders, where essentially it kind of forms like a head and then two shoulders before it goes the other direction. You've got a rising wedge, which again is where it goes up, does this little consolidation, and then goes down. Falling wedge, the complete opposite, so on and so forth. Okay, and then last but not least, you've got bilateral patterns, right, where essentially it can go either way. So you've got, for example, it's gone up, consolidates here, and it can either go up or it can go down. Who knows, right? Descending triangle, same thing here, can either go up or go down, and then symmetrical triangle, again, can either go up or go down. Now, again, remember, you do not want to take these like religiously. These are just there to assist you in your analysis of the coin. So, for example, if I saw this coin around here, I'm not gonna like 100% be certain that, okay, this is gonna go down because it's forming that pattern. No, I'm just gonna use it as, okay, this is one component of my analysis that tells me this could potentially go down, right? Remember, you're giving yourself reasons as to why a coin could go either direction, right? So for example, I'll show you another coin that I was actually looking into recently that formed a pattern, right? It formed a falling wedge, and in case you're wondering what pattern that is, right? It's this one right here. And I thought, okay, cool. This is likely going to go back up now, but it didn't, right? And again, I want you to understand that it's not because I was wrong. It's just because, again, it just didn't end up doing it, right? And that's completely fine. It doesn't have to. Wait, was it the falling wedge? Let me just double check real quick. Yeah, the falling wedge, this one here. So the continuation pattern. So what I thought was essentially what this coin is going to do. So let me just remove this line. As you can see, I already drew these lines some time ago. But what you can see is it goes up here. In fact, I'll go on a daily time frame. Looks like it goes up here, and then it creates this little falling wedge. 4 hour time frame is a bit better. So it goes up here, creates this falling wedge right here, which again, it could still be doing, and then it shoots up. Okay, it's still a possibility. Who knows, right? But again, this is just part of my analysis. I'm not relying on the pattern itself to determine whether this coin is going to do that or not, because there's a lot of other components to it. Is the coin still relevant? Is it something that is evergreen? Is there anything that could potentially become a catalyst that stops this pattern from happening? For example, like if one of these influencers that you see here tweets the ticker, is it really going to be based on the pattern? Probably not, right? If one of these guys call this coin a scam, again, is it still going to follow the pattern? Probably not, right? It's probably going to go a completely different way. So again, don't take the pattern as the be all and end all. It's just there to guide you, okay? But again, you can definitely use patterns to determine what could potentially happen next. Like even here, for example, let me see if I can go into the 15-minute time frame and see if I can spot maybe a pattern that we can look at. Okay, so again, yeah, so I even drew a smaller pattern here, for example, right? As you can see, same thing. It's the falling wedge. Look, went up, and then it consolidated like this. And look, it's literally the exact same as the one I showed you, right? This one right here went up, consolidated downwards a little bit, and then it went up again. If you see here, same thing. Up, downwards a little bit, and then went up, okay? Same thing here. Up, downwards a little bit, went up, okay? Happens a lot. Another pattern you can see right here is the bullish rectangle, right? So if I go here, you can see that right here, it formed what you could call a bullish rectangle because it went up, consolidated here, and then it went up. Okay, same thing. Again, another one is it went up, it consolidated sideways here, and then it went down. So what's that one? That's not a continuation because it reversed the other way. So if we go to the reversal patterns, which is these ones right here, you can see that this one is, well, actually this one doesn't even exist. There isn't even a, you could say it's the rising wedge, right? You could say it's the rising wedge, but this one, did it rise? It was rising at one point. It was rising here, as you can see. So another one you can look at is this one right here. So this isn't a continuation pattern because look, it ended up going down. But look at what pattern this one is, right? This one is a reversal pattern where essentially it went up, and then as you can see, it kind of consolidated between here, as you can see. And then what did it do? It literally broke the pattern, and then it went down. Now, obviously, we don't short meme coins, but if you could short this, you would have made profit. So essentially what you would have done is you would have entered once it broke it. So you would have probably entered around here. You would have probably set your stop loss somewhere here. And then look, as you can see, literally went up and then down. And again, this is if you could short, but you can't. But point is, you would have made a decent amount of money if you could. And look, this is literally the rising wedge. As you can see, literally the exact same thing. And this is why I tell you, like, a lot of people think, oh, charts are irrelevant when it comes to meme coins. So explain this to me then. Like, how is this literally following that pattern to a T, right? How is it literally following that pattern to a T? It's literally identical. It's gone up, which is this line right here. And then it consolidates upwards ever so slightly, as you can see, upwards ever so slightly. And then it drops down. As you can see, the entry is literally just below it, which, as I said to you, if you was to enter around here, you would have followed it down and you would have taken profit here. Again, that's if you could short meme coins, which I think there's some platforms out there that you can, but I don't do it. So I'm not really in a position for me to tell you whether you can or not. But point is, again, it works. So yeah, anyway, that is patterns. Now, the reason I'm telling you what patterns are is so you can just have them at the back of your mind, right? Take a screenshot of each and every single pattern that I just showed you, right? I will make the screen bigger just so you can do it right now, but you can take a screenshot of each of these. And when you're looking at these charts, especially on a longer time frame, you can determine whether or not any of them is following a particular pattern, okay? If you have any questions to do with patterns, let me know. I'll see you in the next video. I'm going to be going over exactly where to find new meme coins. Now, what by new, I don't necessarily mean coins that have just launched, because that's pretty obvious in case you didn't know already. I will go over that in a second. But what I mean by new is new to you. Like maybe you're sitting and you're trying to find a meme coin to get into. I'm going to be showing you all the different ways that I personally go out there and try and find a meme coin for me to get into. It's not going to be a long video. It's just for me to show you the platforms that I personally use and what I personally don't use, right? Because there is a lot of information out there and you might not know what's best and what's not. And I'm going to give you my personal opinion based on my experience of what works and what doesn't, okay? So let's kick things off with the platforms that I personally use. So as you guys know, at the time of recording this video, the best platform to trade on is Axiom. It's just the fastest. They constantly make new updates, so on and so forth. It is the best platform as of now. However, if you still want to use your own platforms, GMGN, Bullux Neo, so on and so forth, you can. They will have similar sections to what you can see on screen right now, where you can see new pairs, final stretch, migrated. Now, if you are using Axiom, all you need to do is click on Pulse on the top left, and this will come up for you, okay? On Bullux Neo, I think it's called Hypervision, and the other platforms, I don't know what it's called. Now, that being said, although I do use Axiom majority of the time, there are times where I will use Dex Screener. Now that might come as a surprise because Dex Screener is kind of outdated, but I'm going to tell you the reason why I use Dex Screener and what kind of coins I look for if I am to use Dex Screener. So first things first, if you haven't already, go to the Discord and go to the filters tab and go and copy the exact filters that I personally use for new pairs, final stretch and migrated. When you go to that section, you can go to filters here and you can click import on the bottom left and you can import the exact filters that I personally have. I do constantly update them whenever I personally update my own. So in case you're wondering, at the time of me recording this video, there is 7 under audit, 2 under metrics on new pairs. There is 7 under audit here, 1 under metrics on final stretch, and then 6 here, 3 here. So make sure that matches. If it doesn't, let me know. If it doesn't, before you actually let me know, go and check the filters section one more time, just in case you copied an old version. Make sure you copy the latest version. Now, another thing that you want to pay attention to is the protocols. So you'll notice, for example, here, I've got a couple ticked, I've got a couple unticked. I'll be very honest, I don't even know why these are not unticked, but it's a thing where I don't care that they are, because barely anything like goes to the millions within these protocols. So for me, my mindset behind it is like, well, what if one day there is? I don't want to miss it. Right? Like one day there could be a token launch that goes crazy on Heaven or Moonshot or Bonk, and it's like, cool, why don't I just leave it on just in case? Because they don't launch anyway, or they don't go crazy anyway, might as well just leave it on, okay? So that being said, what that will allow you to do is it will allow you to filter through. As you can see, like if you remove the filters of new pairs, or if you don't have new pair filters already, this will be full. Like I'm talking like you'll be able to scroll ages, because there is coins literally dropping every single other second. Right? And you want to be able to filter it because you want to be able to see what the good narratives are, what the trends are, what coins are actually safe and not rugs, and so on and so forth. And that's exactly what the filters are meant to be doing. Okay, now getting on to the next point, which is why or when would I be using this page over Deck Screener? If I am trying to find a coin that is actually new, so I'm talking it's launched within the past hour, within the past few hours, or even in the past day, I will 100% use this, right? I say 100%, 95%. I'll tell you why in a second. But most of the time, if I'm being completely honest, I will use this. Why? Because if I want to find something that has launched in the past 15 minutes, I go in new pairs. If I want to find something that has launched in the past maybe hour, just hasn't migrated yet, or a few hours, go into final stretch. And then if I want to find what's been running for the day, I will go on to migrated. Or even like over the next few days. Like you can see, I can even see ones that have launched like 5 or 6 days ago, okay? Now, that being said, I don't want to go too deep into what I personally prefer, as in like, what do I go for most? I will save that for another video. But what I'm going to do here is I'm going to tell you what you should take into consideration for each and every single section before I jump into Deck Screener. So you need to understand that it gets riskier the further you go towards the left, right? I actually, you know what? I take that back. It can be, it always depends on the market cap, all right? It does depend on the market cap. I would say it gets extremely risky in final stretch. It can be just as risky in new pairs, but in terms of potential loss, might not be as risky as final stretch. Now, I'll explain why, and this is why maths really matters here, okay? It's numbers, it's a numbers game, especially in the new pairs. Because you need to understand, majority of coins in new pairs, so for example, if you click onto this coin, it launched around like what, 4.5K. Now, if you got in at like 7.3K, right? The most you can lose if it goes down to, you know, wherever it launched, which is 4.5K, the most you can lose is 37%. So yes, it's high risk, but when I say it's high risk, it means more in terms of like the likelihood of you losing, because the likelihood of you getting into a coin at 7K and for it to go back down to like 4, 5K is high. Like it can easily happen, right? So you need to take that into consideration. Now, the reason why I said something like in final stretch can be higher risk in terms of potential loss is because coins here can easily dump very fast as well. Like even if you just look at here, for example, yeah, like let's say this is on a minute time frame. Let's just say you got in here at, let's just say 12K for the sake of this example, and it just dipped all the way down to wherever this red wick went to, which is this bit here. You would have already lost 47%, and it's not even at the furthest it can go yet. Like this can easily dump in a second. Like if this was to go down to like 5K, you're already down 59%. Or like let's say for example, you're getting at 18K, which is right here, and you think, oh, it could potentially go to like 40K, quick 2x. Well, yeah, but what if it quickly goes down to 8K? You're now down 57%. Or if it goes down to like 5K, you're down 71%. Like the risk is pretty high on these final stretch coins, so you need to take that into consideration. Especially the ones that have launched in the past like 10 minutes. Those are the highest risk ones, all right? So the reason why I'm telling you that is because when you get into coins in the new pair section or the final stretch section, you need to make sure you're minimizing your risk accordingly. The lower the market cap, the lower your risk needs to go, right? For example, if you get into coins in migrated section, you're probably putting in like 2 to 5% of your wallet balance into each coin. hopefully closer to like the 2 to 3% mark, you shouldn't be doing that on new pairs or final stretch. You should only put in like 1%, max 2%. The reason being is because you might think, oh yeah, but that limits my amount of profit. But the whole point as to why you're getting in at final stretch on new pairs is to maximize the upside potential, right? So you shouldn't worry if you're putting in too little, because you're going to get huge gains anyway if your prediction is right. And if you're not confident in that potentially happening, then you shouldn't be getting in the coin in the first place, right? So I'll give you an example. Let's say usually in a coin like this, for example, WIFE, or not even that, because that's at like a 1.5 mil. But let's just say in a coin that's at 110K market cap, you'd usually put in like $50, right? Now, $50 if that goes to like 220K, you've now made $100. Now, let's just say $50 is, I don't know, 4% of your portfolio. Let's say you put half of that into a coin that was at 20K market cap, which now isn't 3%, it isn't 4%, it's 2%. You put that into a coin that's at 20K market cap. If a 20K market cap coin goes to 220K, you've now made an 11x. Now, an 11x on, what did we say, $25 now is $270 in profit. You've now made a lot more by risking a lot less, but because there was upside potential and it still went to the same amount of market cap. So it makes sense both ways. So don't think that, oh, just because I'm in a lower market cap coin, there's huge upside potential. There is also huge downside potential as well. So you need to take that into consideration. So always put in less than you're going to put in a migrated coin. All right. Now, that being said, I said I'm not even going to say this, but my personal favorite section to get into is actually migrated. Now, maybe that's because I actually have a lot more to lose because of the amount I'm putting in. But realistically, I'm still putting in 2 to 5%. So if we was to forget about the numbers that I'm putting in, we still have the same amount of risk involved, right? 2 to 5%. And I personally feel that coins that are able to stay in migrated for hours even tend to have more potential than coins that are in new pairs or final stretch. Like, the likelihood of a coin here running is extremely more likely to run than in final stretch and new pairs. Like, you will see coins in final stretch and new pairs come in and out, in and out, in and out, in and out. Like, there's barely ever any coins that will, like majority of coins that get into new pairs or final stretch never make it to migrated. But a lot of the coins that are in migrated actually run. That's the point. All right. So this is the point. Like, I don't know the actual statistics here, but I'm going to make a statement. Like, I'm going to make this up. But think about it as like 80% of coins in migrated actually make profit when you get in them, versus maybe 20% of final stretch coins make profit when you get in them. And then new pairs, like 5%, will actually, run if you get in them. Like, that's what I'm trying to get at. I don't know the actual numbers. It could be like 10%, 30%, 40%. I don't know. But that's the point I'm trying to make. Like, the percentage of migrated coins that actually run is a lot higher than the final stretch and new pairs in terms of like how many are usually there, right? So, sorry, I'm going to actually repeat something as well, just to make it more simple. So let's say, for example, there's 10 coins in migrated. Maybe 7 of them will actually run. Whereas if there's 10 coins in final stretch, maybe like 2 of them will actually run. That's the point I'm trying to get at here. Okay, so risk is higher. Now, that being said, hopefully that explains what Axiom is for. Axiom is for coins that are recent, right? That are coins you're trying to find at different stages within the early stage of their lifespan, right? And you're going to learn about sort of lifespans of meme coins in one of the next videos, where we call it phases. And a lot of these coins tend to be in phase 1. So remember that term, phase 1. When we go over that in another video, you'll understand exactly what I'm trying to say. Okay? This coin has actually looked interesting. I'm just going to go on a little side quest here, because it went from 1.2 to 1.5 M. Just trying to see what it's saying. All right, this looks extremely scammy. The reason being is because the global fees are extremely low. When the global fees are low, this is a quick side lesson. It means that, like, it's not real wallets in it basically trading. Like, it's probably fake wallets pumping volume into the chart. So again, this is probably fake, hence why you probably see none of my tracked wallets actually in this coin, versus like, this coin that even like went to only flipping 13K already has global fees of free sol, and it's got tracked wallets. All right, so Yeah, just a quick side lesson. This is a scam. Anyway, let's move on. So, next thing is Deck Screener. Now, the reason why I like Deck Screener, and the only reason I like Deck Screener, is for the trending section, which is what you see here. This is the home screen. This is the trending section. Now, you might be wondering, well, why do I like this trending section versus Axiom's trending section? Now, that's, again, it's personal preference. It's from my experience. If you want to use Axiom trending section, by the way, just go to Discover. It looks something like this, right? Personally, for me, I like the fact on Deck Screener, and maybe I'm wrong, maybe I haven't tested it out here, but I like the fact that I can see way more here, and just the numbers here are just a little bit more cleaner, and it's what I want to see, right? For example, age, for example, market cap, past 5 minute volume, so on and so forth. I'm not saying that you can't see that here, but like, you can't see it as well. Like, the only thing that this has over Deck Screener, in my personal opinion, is the token info, right? Like top 10 holders, so on and so forth. Deck Screener doesn't really have that right here. But it's like, for me, that's not the priority right now. For me, I just want to see the surface level information for me to then potentially want to click on it. All right. So for example, as you can see, this has been out for 8 hours, and in the past 6 hours, then 150%. I like that, right? What I like to look at especially are coins that have been out for a longer period of time. For example, this coin here, where it's been out for a year and it's done 32% in the past 24 hours. A coin that's been out for a year doing 32% is quite a lot, especially at 477 mil market cap, right? Just things like this. Now you're probably wondering, like, what I'm going to get at in a second. What you're going to notice is, for Deck Screener in particular, I like to look at the longer term plays, or the coins that have been out for a longer period of time, right? So you could say that on Axiom, I personally limit to coins that have been out for like 7 days, because again, on my graded section, it will go up to like 7 days, whereas on Deck Screener, I can look at coins that have been out for a year. And the thing is with the trending section, and what's so good about it, is you can actually change how long it's been trending for. So again, whether it's trending in the past hour, you can see what's been trending in the past hour and why. So for example, you can see this coin Grug did 87% in the past hour, right? Obviously, I'm not going to pay attention to these big percentages, because that means they've obviously launched in the past hour. Actually, this one has actually launched in the past 7 hours, did 3,400%. So again, this probably would be worth looking into. But it's what I'm saying. Like, these are the sort of opportunities you can look into, right? And what you can also do here, which I personally like, is add filters as well. You can add filters such as, you know, let's say, for example, you want to add age, which is like, let's see, I can't even calculate right now, but what's 24 times 7? I don't know. But point is, like, you can basically set it to a minimum of 7 days, right? So now you look at the coins that have launched over 7 days ago and what they are currently doing, right? You can also filter by actual platforms as well. So for example, if you just wanted to be Solana, you can do that as well. And then you can see what's actually trending as of now, right? And you can sort it however you like. Like, I'm not going to make this a specific video on the actual filters and stuff to do with Deck Screener. I will again put that into the filter section, or it's already there, of the filter section in the Discord. But for now, I'm just telling you why I use each platform and what I use them for. Like how, again, the whole purpose of this video is how you can find new meme coins, right? So if you are looking for something a bit more stable, a bit more long-term, a bit more lower risk, maybe you got a bit more capital to deploy into a coin, then come onto Deck Screener. Okay, as you can see, there's literally coins. For example, this one's been out for 1 month. It's already done 36%. Now you might look at it and think, well, that's a bit low. Like 36%, I'm not aiming for that. But I might be like, you watching this video, I don't know if you have $1,000 or $500,000. There is very well that there is people who are going to be watching this video who have hundreds of thousands to put into a coin, and this is the type of coin that you can put hundreds of thousands of dollars into, right? Okay, maybe not this one. This one's, you know, is mintable and so on and so forth. But the point is, like, you can put in a decent amount of money into these coins that are extremely high market cap. Okay, so let me actually find one. Let's go into Pippin, for example, right? This one did 31% in the past, however long, right? If we go into holders, for example, you'll see there's people literally holding like 50 million, 10 million, 9 million, 4.7 million, so on and so forth, right? And again, just in the past, in fact, let's just see what it did in the past. Look, like, this is insane. So today is the 16th of December. From, let's just say 2 weeks ago, which is 2nd of December, from the 2nd of December, in fact, let's just go here, all right? 9 days ago. 9 days ago, it did 250%. 250%. That means the people who have 10 mil right now, that was on like what? Am I doing maths correctly if I say they were on like 2.5 mil? I don't know if I'm doing that correct. Yeah, like they were on 2.5 mil because it did 2x's or something like that. I don't know. It went from 2.5 to 5 mil and a 5 mil to 10 mil, something like that. I don't know. Maybe I'm wrong. But point is, it's like, well, matter of fact, it actually did like a 3x, 150 mil to 450 mil. So basically, the guys who are on 10 mil right now were on like 3.3 mil down here. So even you, if you put in 3K, you could be on 10K right now. In like 10 days, you could have made 7K. Again, if you have 10K, you could have been on 30K right now in 7 days, right? And again, with someone who's playing with a lot of money, if you only got like $50 put into a coin, don't put $50 into a coin where you're going to wait like weeks for it to turn into $150. No, don't do that. But if you've got a decent amount of money that you can put into coins, this is where you want to look into. And a lot of people don't pay attention to this. A lot of people are always on Axiom trying to look for coins and so on and so forth. And that's why people are scared to put in a lot of money into these kind of coins, because they've got a short cycle, right? And they're a lot like more likely to go to zero. This Pippin coin is not going to zero anytime soon. All right. Anyway, if you have any questions to do with this video, let me know, and I will see you in the next one. Take care. In this video, I'm going to be going over a basic breakdown on analysis when it comes to meme coins safety, or in other words, how to determine whether a coin is going to potentially rug, whether it's a bundle, whether it's, getting farmed, so on and so forth. If you don't know what these terms mean, then you need to go back to the terminology document where it literally breaks down each and every single word and what it means. I am still going to explain a little bit about what each word means anyway in this video, but it is still important that you go and see. So first things first, you're most likely going to need what I'm about to say on this page, obviously, because you don't want to waste your time clicking on coins that are not legit in the first place and you potentially analyzing them. So what you want to do first is make sure that you add the filters that I've given you. So if you go into the filters section of the Discord, you can go and copy each and every single filter. As you can see, I've got filters purposely because it filters out all the potential bad coins. A lot of the time, the reason why most beginners don't succeed or they get burnt a lot is because they don't actually know how to determine whether a coin is good or not. And by good, I mean safe, right? And by that, what we mean by safe is like, the person who's made the coin isn't out there to scam you, isn't out there to take your money and so on. Like, they genuinely not only want to make money for themselves, obviously, because they do, but they want to actually have a coin that goes to decent amount of numbers. Like, they're not just there to have a quick cash grab and get out a coin. Don't get me wrong, a coin can still work even if the dev has bad intentions, but that's if the community take over and so on and so forth. So first things first, as you can see here, there is a bunch of like symbols underneath each coin. Now, if you hold above it, you will see exactly what each symbol means. So this one, for example, is how much the dev is holding. This one, for example, is how much snipers are holding. This one is insiders holding. This one's bundle holding. And this is whether DEX is paid or not, right? This, for example, it says dev sold. So DS means dev sold. Let me try find one where it says the dev is still holding. So this one, for example, the dev is still holding 2%, right? This one, for example, is showing you the top 10 holders, right? So the reason why holder distribution is important is because you don't want there to be a small amount of people holding a big amount of supply, because that means it's a lot more likely for it to dump fast if less people have more control over the coin, right? Because all it takes, for example, is 10 people to potentially dump the coin all the way to zero. You don't want that. You want there to be, let's say, 100 people or 200, 300, 400 people who can dump a coin down, because then it's less likely for it to dump. Does that make sense? So let's go into the actual coin. So first things first, what should these numbers be? Now, there's no like set criteria. Reason being is because I don't want to sit here and tell you like, oh, bundles should be maximum 25%. Insider should be maximum 25%, because then it's like, well, if it's 20%, does that mean it's good? No, not necessarily, because it still could mean that it's bundled, but they just found a way to hide it. Because this is the thing, these people, these scammers, these ruggers, these bundlers
get smarter and smarter each and every single day. It's exactly what they live and breathe. They are professionals in deceiving people and trying to find a way. And there's new tools out there that get created day in and day out that manage to do this, right? And thankfully, there are also tools that try and tackle it as well. So there's both sides of the spectrum, but you need to just be very, very diligent and try and do as much possible checks for you to avoid being scammed or being rugged, right? Now, everything I'm going to show you in this video doesn't mean you have to do it every single time, because you don't, right? A lot of time when I click on a coin, I can just tell if it's a rug or not. I can just tell if it's going to be a scam or not. And a lot of time, like, you can even let other people tell for you. So for example, you might have wallets that you know they would never get into a scam coin, just because you know that they're smart enough not to. So just by that in itself, you can determine, okay, cool, you know what, it's probably not a scam, right? Like, we'll probably find a coin somewhere here where no wallets that I copy are in them. Like, let's just see if we can find one, and it's probably because it is a scam, right? Hopefully we're lucky. Okay, this one. Okay, nope, not this one, not this one. Let's see, let's wait for that to all load. Cool. I mean, okay, this one, does it have? Alright, well, this one, by the looks of it, unless it hasn't loaded yet, to be honest, I don't think it's a scam, because it has been called in multiple groups. It is still loading, so I think that's why wallets are not showing yet. But point being is, like, you will come across some coins where you might see none of the wallets that you're copying or you're tracking are in, and that's just an obvious way to tell whether a coin is a scam or not. Like, that's just one of many ways. For example, now I wouldn't say ever rely on that, because at the end of the day, you don't want to rely on, you know, always having to look at whether wallets got in or not for you to determine whether you should get in, because at the end of the day, you might just be early, right? So this is why it's important to watch this video, because you need to understand how to find out for yourself. Now, let's start off at the top. Now, a lot of time, you know, back in the day, you know, there'd be issues with liquidity and supply and so on and so on. Nowadays, you don't have to worry about that, because a lot of things are launched on, like, Pump Fund. If something's launched on, like, Radium, for example, it's not actually launched on Pump Fund. That's something you need to be cautious about, because a lot of things can be hidden if it's not launched directly on Pump Fund. If a coin has this symbol, then it means it's launched on Pump Fund. You're completely fine, right? So, one thing you look out for here, though, is global fees paid. Global fees paid is something that is so underrated and most people don't pay attention to. This number should always be aligned with the market cap. And by that, I don't mean like there's a certain number per market cap or anything like that. But like, if a coin has gone to 200k, for example, which this has, and this is only like 1 Solana or 0.5 Solana, it's a scam. Because that means that it's not actual traders trading. They are faking the trades. They are faking the volume. They are faking the market making, basically, right? And you don't want that. You want there to be real traders involved. So I've seen coins, for example, that have gone to like 1 million market cap, 2 million market cap, 3 million market cap, and this would be like 6 Solana. That is not how it's meant to be, mate. It's meant to be it's meant to be a high. So for example, if I go to, let's see if I go to let's see if I go to this one, for example. This, I assume, because it's on 600k, it will probably be on like 100 Solana plus, right? There you go, 228 Solana, right? I'm not going to waste time and try find one that isn't legit, but I'm almost certain we could if my filters wasn't on. But the reason why, like, a lot of these, you know, earlier I tried to find an example where it was a scam, it's because the filters that I have work, right? Like, if I take off these filters, I guarantee we'll find a bunch of scams, but I don't want to do that just because I can't be able to reset my filters. But point being, first sign is looking at the global fees paid. Make sure that's a decent number relative to the market cap, okay? Next, obviously, you've probably already seen these before clicking on a coin, but if you haven't, take a look at these. Top 10 holders being 21% is not that bad, right? As long as it's not like one person's holding 10% or something like that, it's fine. Especially with newer coins. When someone's holding like 2.9%, 2.9%, 2%, that's completely fine. As long as people are not holding the same percentage as well, that's a red flag. And yeah, this is completely fine. 21% is fine. Even though it's red, don't let it scare you. Anything above 30 is where you need to start, you know, being a bit cautious, okay? Especially if it's a high market cap coin. Insiders, once again, around 20% is fine. Like, is what it is. I've seen coins run to crazy amounts at 20%. If it's something like 40%, 50%, then again, you need to be cautious, right? Now, bundlers. Bundlers can be 2%, it can be 20%, it can be 30%. I have seen bundled coins that say 0%, and that's the whole point, because they're trying to deceive you, right? You need to be cautious, and there's only so much you can do to actually see if a coin is bundled. Ways to do that is just by seeing the wallet activity, see if the wallets look identical, for example, the way they've been funded, so on and so forth. Are they real traders, are they fake traders, and so on and so forth, because that's how you determine whether it's someone just buying across multiple different wallets using a tool, or if it's actual real traders. You can also go on something called bubble maps, which is this right here, and you can see which wallets are linked. Now, if it's just this many bundled wallets, like, it's not that deep, right? So for example, this one, he has a supply of 3.75%. But as you can see in the top holders, there was no 3.75%. That's because he's holding it across 2 different wallets, or 3 different wallets, I should say, right? And if you go to here, same thing, 3.5%. One of the wallets he has 1.9, one of the wallets he has 1.6, right? Same thing with here. But that isn't that deep. What's deep is if you see like a massive circle or ring of different wallets all connected. That's what's concerning, because at the end of the day, as you can see here, multiple people hold in different wallets, right? This person has a cluster supply of 0.32%, right? Or these 3 wallets here, or these 3 wallets here. It's normal. But as long as someone isn't holding like 7, 8, 10, 20% in one cluster, then it's completely fine, right? Another thing you can use, which this coin doesn't have, you can click magic nodes. It will show you like past clusters as well, which is important to know. You can also click this to refresh as well, and so on and so forth. Right? This will give you an idea on like holder distribution. Holder distribution is extremely important. Okay. Now, another thing you need to take into consideration is chart movement when it comes to like safety. A lot of the time, it will be pretty obvious if a coin is sus, and by that I mean, like, I can't find an example for you now because it would just take long having to look through. But like, if a coin looks too good to be true, where it's like literally just green, 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 or just like it will literally, like, there's some scam coins that will literally just move like this, right? Like it will just move like that, like a scam. Like if we search one in, actually, let's see. So a lot of time they make like derivatives of popular coins. So for example, let's go to this, right? Even though it says 2 point, yeah. So this, exactly this, right? This is a scam. Right, you should never get into this. As you can see, everything looks green. Liquidity pool isn't even burned. Dex isn't even paid. There's barely any holders yet. It's on 2 billion market cap. This is a scam, right? Never, ever, ever buy into a coin like this, right? If a chart looks like this, don't get into it, okay? And more or less, like, look, I know you probably watched this video thinking there must be more to it. There must be more to spot and scams. And there is tools that I'm going to show you as well, like, to make this whole process easier. I'll show you in another video. But I just said in the beginning of this video, my point of this video is just to give you a basic understanding on how to spot rugs from the get-go. Like, because what I'm trying to do with you as well is allow you to be as efficient as possible. I don't want to have to give you some long task for you to have to do every single time you find a coin, because I don't do that, truthfully, right? And I want to get you into the habit of being able to trade fast yet efficiently as well, where it's like you're able to spot scams, but you don't have to go through, ages of analysis just for you to determine whether a coin is a scam. You find out it's a scam, you have to move on to the next one, do the whole thing again, and so on and so on. It's just long, right? So yeah, if you have any questions to do with like basic coin safety, let me know, and then I will make a video on like tools for you to use when it comes to rug checking as well. Okay, other than that, if you have any questions, let me know.
For you to understand psychological points, you first need to understand the cycle of trading emotions. All right, when we trade, and regardless of who you are going to be going through a cycle of emotions. Now, there's a reason why they say trading is 80% emotion and 20% knowledge, experience, whatever you want to call it. Because for you to become a successful trader, it's all about managing emotions. And there's going to come a point where you're not going to be able to, and it's likely in the beginning of your trading journey. Everyone goes through it, where you are going to struggle to manage your emotions. You're going to be feeling all the emotions that you see on screen, right? Euphoria, anxiety, fear, desperation, optimism. And you're not going to be able to help yourself but take action on these emotions. And I mean, look, the reason I'm recording this video is, number one, to show you, well, to actually warn you that this is coming, and to show you that you can actually learn from them. Not only learn from them, but also understand that you're going through that particular emotion when it comes, so that you can take the right action alongside that emotion. Does that make sense? Because a lot of the time, let's say for example you're panicking, obviously you're going to take action based on that emotion, which is generally one to do with what someone will do when they're panicking, right? They'll scramble, they'll make an impulsive decision, so on and so forth. What we're trying to do is the complete opposite. We're trying to make rational decisions in a time of, in a time of panic, in a time where things don't really seem like they need a rational response. And it's the same thing with these emotions, for example, euphoria, right? Or thrill, where it's like, instead of being calm and overly excited and just like feeling like, yes, I made it, like I'm all good now, I can chill, you should be a bit more aggressive, okay? Which we're going to talk about. So let's go through these emotions and let me explain exactly what each one kind of looks like. I'll try not to take too long. I will probably skip a couple as well. But typically, when you first get into a coin, obviously you are likely going to be optimistic, right? That's why the first one is optimism, because you will not get into a coin if you think it's going down. You're likely to go into a coin if you think it's going up. So it's optimism, right? And then excitement comes around, because excitement is what happens when the coin starts to go up and you feel like, oh, I just made the right decision, right? So the coin starts to go up and you are now feeling a sense of excitement. Now let's skip past thrill, because thrill is obviously where now the coin has, continue to go up, so on and so forth. Let's go to euphoria. Euphoria is now where you are like over the moon because your coin is at a crazy position, right? Coin's at a crazy position and you just feel like, this is going to continue going up, so on and so forth. And whether you feel like you're going to sell or not, you can't determine that now until you're actually in that position where you're in a coin and you're 10x up, 15x up, 20x up, and you're like, wow, this could do 100x, this could do a 500x, so on and so forth. That's where the real test of emotion comes in. Which leads me on to the next part of the cycle, which is the downward spiral, right? Where we start to experience stuff like anxiety, denial, fear, so on and so forth. This is where your coin no longer follows in the route that you expected it to go in, where now it starts to drop a little bit and you're like, wait, hold on, this isn't what I expected, right? I could have sold up here, what's going on, right? Is this the be all and end all? You start to get denial, so on and so forth. Then your coin starts to do stuff like this and you're like, oh, like, is it actually not going to go back up anymore? What should I do? And then you start to get fearful, right? You start to fear whether you made the wrong decision. You start to fear whether or not this coin is going to do what you thought it was going to do all along, or if it's going to go down, so on and so forth. And then again, whatever the chart ends up doing leads you on to the next point, desperation, right? Because now the coin is going down and you are desperate for it to go back up. You are desperate for it to have some sort of positivity within it, so you can tell yourself that you didn't make the wrong decision. And then, unfortunately, again, it's not going to go in your way, right? Now, again, this is just an example, by the way, but like, typically this is what tends to happen, right? And this is where panic comes in, right? And obviously, if you want to go ahead and search the actual definitions of capitulation or despondency, more or less, it just basically means where you are on the verge of parting ways with this particular thing. If you were thinking of getting out, you are now, again, the likelihood is you are now at a loss and you are going to get out, right? These 2 points, as you can see, I don't know if you've read this box yet, or this box even, these 2 points are, well, this one is the point of maximum financial risk. Why? Because you are probably in so much profit here, where if you are to make the wrong decision here and you hold on too tight, you will lose the most amount of money. Although you might have gotten in here, right? Let's just say you put in $1,000 here. You might think, oh, well, if this now goes down below my $1,000 and I go to $700, I only lost $300. Well, no, because if your $1,000 went to $10,000 up here at euphoria, then you realistically lost $9,300. So this is the point of maximum financial risk, because you've got so much to lose, right? The point of maximum financial opportunity is despondency, because you barely got anything to lose because you've already lost, in a sense, and all that's left to come is profit, in a sense, right? Which kind of leads to you could say the predicament or whatever. It's like a dilemma where for you to get out of this, you kind of need to hold on. Now, this isn't me telling you to hold on, because it all depends on the situation. But essentially, the ones who lose are the ones who sell at this point, right? The whole point of this game is to play on your emotions. If you get out here, you lose. You were better off getting out here, 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 before getting out here, right? And you were better off getting out here than you were getting out here, right? But the likelihood is you probably didn't get out here because you thought there was more to come, and you are now stuck anywhere between here, right? This is what tends to happen. A lot of the time, people experience this and they take the complete opposite action than what they're meant to be taken. And this is why I'm teaching you this. Because a lot of people, instead of selling here, they hold. And instead of, either buying here or holding on for longer or buying more, they sell. And that's the complete opposite as to what you want to do. Which then leads me on to the last part of the cycle, which is depression. Because again, you are now, just to show you what that part looks like, it's like, cool, we've gone through the highs and then we've gone through the lows. And despondency is kind of like, when you're at the bottom here now. And depression is like, okay, cool, well, the coin is now just doing something like this here. And like you've now come to your senses that, okay, cool, like probably not going to make much of it. And then what the coin starts to do, and this is where phases come into place as well, by the way. If you haven't watched my videos on phases, you better go back and watch those. But this is where maybe a phase 2 starts to come in. And then here comes hope. And what you're meant to do at hope is hold on, right? Starts to go up a bit more. You've now almost approached where you were before. And then you've got relief. And then you've got optimism. And then it starts all over again, where you might now, again, go to excitement, go to thrill, go to euphoria. And this is the whole point as to why I'm here teaching you that you need to learn how to sell at these points. Because if you go back to those points again and you don't sell, the same thing will happen again. Okay?
In this video, I'm going to be speaking about target prices, or in other words, what I like to call it, psychological points. Now, if you haven't watched my YouTube videos, you won't know what I'm talking about, and I definitely recommend you to go and do so. If you have, then obviously this is going to be a recap video, but I definitely still urge you to watch it because, again, you might learn a new thing or two. So, what are target prices, or what are psychological points? So, what they are is they're prices, or you could even say they're not even prices, they're market caps, right? They're market caps for you to get an understanding as to whether or not you should get in a coin, get out of a coin, where a coin will probably go to, where the next step is for a coin, so on and so forth. So for example, like, you will be able to use these psychological points to determine where people are most likely to take profit or to exit, or where the coin will likely top or bottom, and so on and so forth, or where it will typically bounce off of. So a lot of the time in the crypto house, when I'm making a call or when I'm analyzing a coin, and people, or I tell people like, oh, I think this is going to go to here next, people are so shocked as to how I actually predict these things, and a lot of the time I'm actually correct. And it's because I understand target market caps. I understand psychological points, right? And most people don't. You need to understand this in order for you to determine where a coin will go to. Now, don't get me wrong. You're not always going to be accurate. I'm not always 100% accurate. But a lot of the time, I am very, very accurate, right? Or at least if it goes in the direction that I predict it's going to go in, a lot of the time, I'm extremely accurate on where it's going to bounce off of, or, where it's going to top, so on and so forth. And in this video, I'm going to show you. And it's very, very straightforward, right? The reason why I call it psychological points is it is genuinely just based on psychology, right? When someone, especially I'm talking like the 95% of traders, the retail traders, the bad traders, the ones that don't know what they're doing, right? A lot of the time when they have an idea of where they're going to get out of a coin in their mind, they will set a kind of round number, right? Or when they're setting like buy limits, sell limits, so on and so forth. No one is ever going to set a sell limit on like 738k, right? No, they're probably going to go for like 800k or like something around that, or let's say 700k. Same thing with like if a coin is approaching a mil, no one's going to say, oh, I'm going to take profit at 927. No, they're probably going to take profit at a mil. Now you can use that to your advantage, because now you know that two things. One is around the mil is when you can see a lot of sell pressure, as you can see in this example here, right? As soon as it touches the mil, a lot of sell pressure. Why? Because people have their sell limit set there. They have their take profit set there, right? Same thing with here. Again, close to a mil. Don't get me wrong. A lot of people do the opposite as well. A lot of people say when it goes to a mil, I'm going to buy some. Hence why it goes up a bit, and so on and so forth. But this is what happens. So how you can use this to your advantage is, one way is, for example, let's say a coin is approaching a mil and you actually plan to take profit around then. Well, don't take profit at a mil, because everyone else is going to do that, right? Take profit around like 970, 965, 980, so on and so forth. Because you don't want to get caught in this red candle where, for example, you set it at, let's just say, a mil, and then all of a sudden the bot or the platform that you're using takes you out at like 880k because everyone was trying to sell at the same time, and it happens, right? And same thing with like buying, right? For example, let's just say you wanted to buy more, let's just say here, right, 400k, and let's just say this huge candle. Obviously, I'm on a 5-minute time frame, but let's just say theoretically I'm on a 1 minute for just this example. For just the sake of this example, you don't want it to seem like, you don't want the coin to get you in late, like at 450k. So then why don't you say it at 410k, 415k? These are the things that matter when it comes to actually understanding these target market caps. Now, let me go through what the target market caps are, right? Because they're not just random numbers like, 700k, 600k, so on and so forth. They're actually very specific numbers a lot of the time. And it also depends on the chart itself. So generally, not all the time, and I'm going to show you a different example, but generally, the most common psychological points are 100k, 200k, 500k, a million, 2 million, 5 million, 10 million, right? And so on and so forth. Like, that is the most common psychological points, right? Now, don't get me wrong. Yes, like, it might be 100k or like, it might go 100k, then 250, then 500, and then like, but more or less, that's what it is, right? And a lot of the time, this is what it will be for a lot of coins. Like, if we even go to see where this coin went to, for example, it's funny enough, it's at 4 mil right now. But like, if we look at the places that it's bounced off, right, it has literally bounced off these points multiple times. So for example, as you can see, when it first started, it bounced off 100k, right? Then it broke it. Then it started to use it as like a support, but then it managed to break that support again, and it turned into a resistance. You see, it bounced here, went back down, went up. Now, this would be a lot clearer if I was on the 1 minute time frame, but it's going to make it too long of a chart. But as you can see, it bounced here as well, and then it goes up. It bounces once off 200k, breaks it, and then it turns into a mini support, right? Then it flies again. What does it do? Bounces off 500k here, manages to break it. Now, this is the thing. There's going to be some coins that break a psychological point in an instant, and there's going to be some that need to tap it once, twice, maybe even 3 times, right? Same thing here. Look, goes to a mil. And by the way, when we say tap it, like, a lot of the time, a tap means, again, it can go over by just a bit, it can be under by just a bit, but more or less it's around the same thing, all right? And same thing here. Once it dips, it tends to bounce to like 500k, 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 as you can see. Again, a mil, right? Again, so on and so forth. Like, you see what I mean? Like, here, close to a mil, right? Here, it bounces to 500k, then it breaks it. These are all telling you what you could potentially do. Because again, remember, like, this will also allow you to determine whether a coin is worth staying or not. So for example, if a coin is consolidating, as this one is, between 500k and a mil, and let's just say you're in it around like here, 650k. Well, now you know, okay, cool. If it actually breaks a mil, manages to stay on top of a mil, then cool, we're going to fly to new levels. However, if it's struggling to and it comes back down and then it ends up breaking past support, like it did here, significantly, you know now that, okay, this is probably going to go into a downtrend, which it did, right? Same thing, vice versa. Look, it broke 500k. It didn't really stay above, but then it went below, bounced off it again, went below. Then it broke it, and now it stayed above. And the next thing you know, it started to bounce off the next psychological point, broke it, and now it used as support. Again, so on and so forth, like clockwork. And it happens time and time and time again. Like, you can literally test this theory, right? Go to any coin and go and test psychological points. Like 100k, 200k, 500k, 1 mil, 2 mil, 5 mil, 10 mil. Okay? And more likely than not, it will work. Right? Now, I am going to show you a different variant. 2 psychological points. That is slightly adjusted to this one. It is slightly different, but it still makes a lot of sense. This coin, for example, currently at 30 mil market cap, or wherever it is, 26 mil market cap, right? Now, one thing I want you to notice here, yeah, and I didn't mark this all the way from 100k because I was like, you know what, it's a bit long. Let's just do it from a mil, right? So first of all, as you can see, it uses a mil as support, as resistance here, so on and so forth. Breaks it, starts to bounce off it here, and then as you can see, 2 mil. Let's see. Okay, these are quite big wicks, but let's just see. Bounced off it here. Didn't really bounce off it here. It kind of broke, but I can see that might be a wick. Let's just see. Hold on. A wick, by the way, is this line here. This is the candle's body. But anyway, okay, it didn't really bounce off 2 mil. I'd say it kind of broke it. You could say it went to like 3 mil. Let's just see. Cool. Uses it as support here. Uses it as support here. Breaks it. Kind of consolidating around it. To be honest, I would say the resistance here was probably around more like 3 mil. See, this is the thing. A coin can have... It doesn't always have to jump from like 2 mil to 4 mil. A coin can have a psychological point at another increment as well. So it can be like... Literally, hold on. It can be like 1 mil, 2 mil, 3 mil. But again, they're all psychological points. They're all like solid numbers. So now that I've added that line, you can actually see it's a lot clearer. Like, as you can see, bounces off 3 mil. Then it starts bouncing off 1 mil, 3 mil, 2 mil. And then even it goes up to like 4 mil, back down to 2 mil. But every single time it's approaching a psychological point when it bounces. Do you notice that? Right? Now, as it starts to consolidate here, what I want you to notice is with this one in particular, right? It doesn't necessarily bounce off 5 mil a lot. It bounces off 4 mil more. Now, what I like to see, what I tend to see a lot is sometimes a coin will have psychological points in doubles, right? And it's probably to do with the fact that a lot of people want to aim for 2x's, or a lot of people take 2x initials at 2x. So for example, as you can see, it kind of bounces around like 2 mil quite a bit here. And then what does it do? It starts to bounce off 4 mil around here. Same thing here, look, 4 mil bounces here, 4 mil bounces here, kind of tries to break 4 mil bounce here, 4 mil bounce here, so on and so forth. And it's just like jumping in between those two. Obviously it does bounce off around like 3 mil as well. But even if I draw a line around 6 mil, I can guarantee you there are some bounces at 6 mil from the 3 mil mark. So as you can see, a bounce here, for example. You could say it bounces here. Again, we are on the hourly time frame. I mean, if I reduce this to like 15 minutes, it'll probably be a lot clearer. As you can see, like a bounce here. Hold on, 1 second. Alright, cool. So there you go. It's a bit clearer here. So as you can see, bounces off 6 mil, bounces off 6 mil. 6 mil here is used as a resistance. 6 mil here is used as a resistance. 6 mil here is used as a resistance, and so on and so forth. And then the same thing with 4 mil. Look, 4 mil, use the resistance here, use the resistance here, use the support here, resistance here, resistance kind of here. And then if we double 4, it goes to 8. Same thing here, resistance here, right? Resistance about here, right? And then if we go to 15 mil, same thing. It's used as a support. Used as a support. Now, the reason why I say 15 mil, I didn't really want to go 16 because it doesn't really go to like 16 and then 32. Again, remember, like solid numbers, like a lot of time, solid numbers, especially past 10 mil, tends to go in like 5s and 10s, right? Not like 6s. So I went from like 8, double 8, you could say I would play it safe by going to 15 mil. You can see it literally bounces. Oops, I moved it a bit. It literally bounces here, here, here. And it even uses it as a resistance here, right? Now, if we go to 30 mil, same thing. Look, it bounces a little bit here. You can't see that wick too much here. But as you can see, it starts to bounce here a little bit. It bounces here as well. Bounces here as well. Bounces here as well. Bounces here as well. And currently it's nearly around, it's around there as well. So again, like there's different ways psychological points work. But a lot of the time, it will either work generically, as you can see here, like again 100, 200, 500, 1 mil, 2 mil, 5 mil, 10 mil, so on and so forth. Or it can work in doubles, 1, 2, 4, 8, 15, 30, 60, so on and so forth, right? But look, don't take this as literal, like, oh, like this next coin 100% the psychological point will be 15 mil. Like a psychological point can still be 9 mil, can still be 7 mil. Because you need to think about it, if someone gets in a coin at 3.5 mil, where are they going to aim to get out of for a 2x? 7 mil, right? And a lot of the time, people always try and get out in round numbers, right? Just think about that when you get into tokens. Like, always think about the psychological points, right? It trust me, it makes a lot of sense once you start to go on to like go onto Deck Screener and just, we'll see if we can get lucky right now and see if we can find a coin, right? Let me go to Pippin, for example, right? If I go to Pippin and I set a 4-hour time frame, for example, right? If we go, okay, this ranges it over a huge amount of time, right? But like, if we look at where it bounces off a lot, we can see it bounces between, okay, so instantly you can see, for example, bounces between 20 mil and 40 mil. Look, bounce, 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 then it breaks, and what does it use? 40 mil as a support. Then what's the next level? 60 mil, right? Then 80 mil, right? A lot of time, a coin will never just jump from like 40 mil all the way to 80 mil. It's going to obviously stop at the next psychological point, 60 mil, 80 mil. And then what does it do? Goes back down, bounces off 40 mil, and then it breaks the next support. What does it do? Goes down to like 20 mil, and then it kind of bounces around there, starts consolidating between 20 and 40 again, 20 and 40, 20 and 40. Do you know what I mean? And that's because it's like a double. Do you know what I mean? And I'm on the 4-hour time frame. If I go to the hourly time frame, it will probably be a completely different story, right? You'll see a lot more. You'll get a lot more clarity as well. But let's just see if we can go back and see. This is exactly why I don't do the small time frames on these long coins. But look, so for example, if we go to here, right? If we go here, this is exactly what we were talking about with the 20 mil, 40 mil. Now, obviously, the market was completely different phase back when this launched, right? 10th November 2024. Coins would run extremely, extremely fast. But like, again, same thing here. Look, you can see it bounce between 2 and 4 mil, right? Throughout this hour. And then it just shot up, right? And then from 15 mil, where it was the new resistance, it broke it, and then what happened? It went all the way up to 30 mil. 30 mil here, as you can see, it bounced here, went back down, bounced. You could say this is a bounce. I'm not going to say 100% is, but you can see it bounced here. What did it do? Went back down to 15 mil, right? Bounced again, here, went back down 20 mil. Now, you could say, to be honest, what it did here is it went to 40 mil, and then it bounced off half of that, which again, it just shows doubles, like 20 mil, right? And then I'm guessing if it went to 50 mil, which is the next one, like almost 50 mil, bounces off 25 mil. Again, almost here, okay? And then again, if we go to like 60 mil, so on and so forth. Do you know what I mean? That's how psychological points work, right? You just need to look at it as round numbers, and you need to make a judgment based on the coin that you're looking at, because every single coin is going to be different, right? Like, again, for example, if I see this coin go to 300 mil, I'm going to think, okay, cool, then the possibility of it potentially dropping to like 150 mil is likely. And if we go to 150 mil, you see it bounces off it a lot, quite a lot here, right? It even bounces off it here and it shoots right back up, and then it comes back down and does a bit more of a dump, right? Proof is in the pudding. But anyway, any questions, let me know. See you in the next video.
In this video, I'm going to be going over common topping and bottoming patterns. Now, if you don't know what that means, it basically means, you know, what are the common tops that we see and the common bottoms that we see for you to understand whether a coin has maxed out or whether a coin has bottomed out. Now, quick disclaimer for this video. This video isn't going to be a magic trick on how to always know when a coin has topped out, or how to always know when a coin has bottomed out. Like, I could have easily went and found like a few examples and claimed like, oh, I know exactly when a coin tops and I know exactly when a coin bottoms. But truth is, I don't, and no one does, right? Unless someone has full control over the coin, no one actually does, right? Because there's a lot of things that affect a coin topping out or a coin bottoming out as well. Because, again, anything to do with news, anything to do with the trend, anything to do with the market. Do you get what I mean? So, I mean, we've seen time and time again where people make predictions and then they get it wrong, even me. And it's because we can only do so much for us to understand what happens on a general scale, but in a lot of cases, it might not go in the way that we expect it to go to, okay? So in this video, instead of me trying to find a couple examples, I'm going to explain to you what common topping patterns look like, what common bottom patterns look like, how you can establish what they look like as well and find your own, and then how you can use them, okay? Because again, it's never going to be one size fits all. And in fact, there's probably going to be so many different topping patterns and bottom patterns that you understand that it's not really something that you should rely on, but it's something I'm going to show you anyway, because sometimes it can come in handy. Like, you should never look at a pattern on a chart, for example, like, you know, a bottom pattern I'm going to show you and think, oh yeah, this is 100% going to reverse, or yeah, this is 100% going to top out here. Because truth is, it might not, right? That doesn't 100% mean it will, okay? And you don't want to rely solely on that. So let's show you a couple examples. So just close one by accident. So what I want to show you here, for example, right? A very common, in fact, before I start, sorry to go off track one more time. One thing you're going to realize with these sort of patterns, like common, you know, top patterns and bottom patterns, is you're going to be able to establish them yourself at some point. Like me, for example, when I'm trading, let's say I'm looking at a coin like this,
Like a lot of the time when I'm looking at a coin like this, I will recognize this chart from another chart that I've seen maybe a month ago, maybe a few weeks ago, or multiple. Like you won't realize until you're in the game for so long that so many charts look similar to what you've seen before, and you've kind of got this memory of what happened back then. And I don't know if it's linked to trauma or what it may be, but like, for example, yeah, let's just say I've seen this chart before, and let's just say once I bought in here and I thought, oh yeah, this is definitely now gonna go shoot up, and the next thing I know, it ended up dumping. Well, what do you think my brain's gonna do next time it sees a chart like this? It's gonna have that sort of, that response where it remembers, oh damn, I've seen this before, I need to make sure I don't make the same mistake. Now don't get me wrong, you're not going to remember every chart pattern, you're probably not, right? But a lot of the time, for significant moves or significant chart patterns that look very, very like, very, not organized, but you get what I mean, like they look similar to what you've seen before, it will make sense. And this is why as well, like, a lot of charts actually look the same. You'll be very surprised. Like sometimes you'll be trading two coins at the same time and you'll see their charts. If you zoom out on a bigger enough time scale, you'll see they look exactly the same or very, very similar. And you can establish what's going to happen because sometimes the other one moves ahead of the other. All right? Or vice versa. Okay, so anyway, one of the most common top and bottom patterns, obviously, you guys know psychological points. This is something that you kind of need to take into account when it comes to looking at tops and bottoms, right? Like as you can see, for example, like it tops out at a mil a lot, right? It bounces off a mil a lot. Even if you go down to like 600k, for example, it uses that as a support. If we go to 500k, for example, it uses that as a support as well. It bounces off it, so on and so forth. You guys know I repeat this every single time. Now, why is this important? Because a lot of the time, a coin will bottom out or top at a psychological point, like a lot of the time, right? So for example, if we look here, this has topped at one point around 400k, and then what happened is it then started to consolidate and then it broke through it. And now if we look back at where it topped and then back down to where it dipped, it went back to around that same level, right? 400k. And that's because it went based off the previous psychological point or the previous resistance. Okay, same thing here. As you can see, it literally bottomed out right there. Okay, and then it reversed. So the reason why this is important is because look now, it is again dipping once again. So it's done this little run and it's coming back down to 400k again. So the reason why this is important is because you could ask yourself now, okay, cool, is it going to bottom out at 400k again? Because it fully could. But again, as I said, you wouldn't just rely on this. You need to actually look into the narrative, look into why it could potentially bottom out here, or what could make it reverse, for example. Why is it dipping this much? Because it does look like it could realistically bounce off here again and start to move again, right? And if we look at it, it might look bad right now because you've seen like it ran, it dipped again, it ran, it dipped again. Surely it's going to die out now. But if you go on a big enough time frame, it doesn't actually look that bad, right? Because if we're looking at this as a coin that's going to last for a longer time period, this actually doesn't look that bad, right? It could fully well just bounce off here and then maybe run again. Now this leads me on to the tops now. Tops are slightly different because obviously at the end of the day, tops, it's a lot harder for a coin to top than it is to bottom, right? A coin, it's very easy to sell than it is to buy in the market, okay? Like majority of coins dump more than they fly. But the thing is with tops, you'll see that they tend to bounce off the same level quite a lot. And it's because, again, people use them as points of, where it last went to, or where they feel like it's going to top, so on and so forth. So as you can see, it tops here at a mil, it tops here at a mil again, and it basically tops here at a mil. Now this is something that you see quite commonly where a coin tops around 3 times before it does anything significant, and that's in both directions. So what I mean by that is a lot of the time what you'll see is a coin will hit the top 3 times, and then that will tell you the next move will basically be it either going, so let's just say it does this like 1, 2, 3. Now this is where the next move, a lot of the time, again not all the time, is determined, because either now it will go boom and it'll break, or it will go boom and then it will break. There isn't many times, unless it's like consolidating massively throughout this point, like, and it's not necessarily bouncing, it's just consolidating and it looks like bounces. But majority of the time when a coin is like literally like volatile and trying to bounce, like it's got a steady uptrend basically, like it's not just going sideways. There's a difference between a coin going sideways and a coin going up or a coin going down, right? So for example, let's just say, so this one for example, right, it's going up, but then it bounces off a mil, and then it's still basically going, it's still in an uptrend, it bounces off a mil again, and now it's breaking structure, and now it's starting to consolidate here. So this is invalidated. That's why it didn't break here, right? Because again, this is basically the third bounce, but it's not in an overall uptrend. Does that make sense? So anyway, back to what I was saying. This is the kind of significant move. So it will either do one of two things. It will either break or it will again go like this. Now, again, as I said, this isn't for every single coin. This is what can happen on a general scale. Again, if we look at this coin, for example, right? It topped once here, and now it's topped again here. So now, more likely than not, I don't think this coin is going to do this again and do this again and do this again and do this again. I don't think it will do that, right? What I think this coin will either do is it will either go like this and then it will be in a downtrend, and then maybe it will bounce off here, and then it could potentially reverse if there's any reason for it to reverse. Again, this is me purely going off chart. Or it could do what I just said, which is, okay, bounce once, twice, 3 times. Now when it tries to go here, it's actually going to break. And then it will fly. Alright? Let's see if I can find a different example. Okay, so, yeah, so look here, for example, right? If we see here, bounced once, bounced twice. I'd consider this the same bounce, same thing, or you can consider this 2, it's up to you. But then again, third time, and then after that, it breaks, right? That's generally what happens from what I've seen. But again, obviously at the end of the day, there's millions of coins out there, right? Not every single coin is going to follow this structure, but it could, okay? Now, look at this, though. This is what you call consolidation. This is what you call, like, look, this is why this hasn't, like, broken. Because, as you can see, this has bounced once, twice, 3 times. I consider this as one bounce. Is this a bounce? You could say maybe it tried to break here, 1, 2, 3, and then it tried to break, but it didn't. So now I just consider this consolidation, right? Or you could even say, like, maybe because it failed to break through, it's starting to dump now because the breakthrough is invalidated, right? Again, these are things that you need to kind of, this is just like, these are just guidelines basically, right? These are just to help you make a decision of what could potentially be happening. Because at the end of the day, no one can predict the future when it comes to a meme coin. No one knows what's going to happen. Like, no one generally knows unless someone has full control, as I said. So all you're doing is you're trying to use this to make rational decisions so you don't feel like it's just a bunch of lines on the screen, right? And it also allows you to time your buys properly, right? And to be patient with the way you get into coins. Because, and this is what has helped me a lot, because, like, for example, if we go back to this coin here, where, for example, you know, we established that, okay, the next move could be a run. What I now know, okay, cool, let's just say I've seen this top here, and then I've seen it top here again. I now can think, okay, cool, you know what? The only way for this to run again is if it tops one more time. And is the likelihood of it topping, is it high? Possibly. So what I'll do now is, if I see this first top and then the second top, I'm not going to get in here. Why would I get in here when I expect it to potentially bounce a third time before it runs? So what I'll do is I'll wait for it to dip. And I'll wait for it to dip, Realistically, I would have probably gotten in here because I would have thought it kind of would bounce off there, but it went even lower, right? Could have bought in here, could have DCA'd in here. To be honest, what I would have done for this exact coin, I'll tell you, right? Let me show you like what I would have done as if I'm thinking to get into this coin. So what I would do is, let's just say I see this coin, okay, bounces here, fails to break. That's the most important. If it fails to break, that's when you know, okay, cool, it's bounced. If it's actually gonna, like, you can't just see, oh, it touched here, oh, that's a bounce. Like, no, you need to see it like actually fail to break, right? Because then that means it's not actually being able to break it, okay? And then when you see it dipping, I would have personally bought around this bounce because I would have thought, okay, cool, it's probably going to bounce off here and go back up, but it didn't. Would have bought here. I would have set my stop loss below this bit here, because I know that, okay, if it goes below here, surely it's gonna dump. Like, this is too low. Like, as you can see, there's a previous support and resistance together, because it's such a close, it's so close together, as you can see. But obviously we are on a 5-minute time frame. But I would have set the stop loss there. I would have probably DCA'd in around here, and then probably around here again, right? And that kind of minimizes my losses. Rather than putting in, let's just say, I don't know how much, let's just say $500 into here, I'd put 250 here, 250 here, and now my losses are minimized if it was to dump back to here. But now look, it's now gone back up to 700k, right? Now, just from this move alone, let's just go to the middle. I would have made basically a 2x. Just by that, just by timing my entry, right? The issue is, a lot of people, when they see this kind of move and they see, oh, a coin has ran so much, they buy around here. And they miss out on potential gains just if they waited like 30 more minutes, 20 more minutes, right? 20 more minutes could have made you double your money. But if you bought in here, you would have been stressing this whole time where you're down 63%, right? Because where else are you going to set your stop loss? You can't set it here, right? That's too high. You'd have to set it around here, right? So this is the thing. You want to also use this to time your buys, okay? And as I was saying, like, if you got in here, even if it went back up to here, you're barely in profit, 8%, right? And then your emotions are going to start coming into place, saying to you, oh yeah, now it's going to run, right? Now this also works on the other, on the flip side, where it allows you to time your sales as well, right? Because a lot of the time, let's say you got in, let's just say here, and you've seen this run, and you thought, okay, cool, surely we're going to go even higher, but it didn't. And it bounced once, it bounced twice, and now you're like, damn, like, I didn't sell here, I didn't sell here. Now, you could do one of two things. You could either, when you see this, sell around here and think, okay, cool, you know what, maybe we're not going to break, let me see if I can wait for a dip, reinvest again somewhere around here, whatever it may be. Or if you decided to stay in, at least now you know, okay, cool, this might top a third time, where on that third one, just to be safe, I'll take majority of my profit, for example, right? Where you take it here. Or on the third one, you say, okay, cool, if it doesn't break off to this third one, I'm going to sell around here. This is why understanding these things can be important, okay? And if you like, the best piece of advice I can give you going off this video is go and look through coins that you've personally been in and try and spot these patterns. And I guarantee you, on at least some of the coins, you will spot patterns that you didn't see when you were in them. And now you're going to move forward knowing that, okay, these patterns exist, all right? Even if you weren't in the coin, even if it was a coin that was called by someone else, right? Go into that coin and just try and establish a pattern and just see, okay, cool, yeah, this is exactly what we're talking about. Because what you won't realize is, like, there'll be some coins that came out, for example. All right, let's click on this, for example. Maybe this will help us. There'll be a coin that you're just doing it for the sake of trying to establish the pattern, and you'll be like, oh, damn, this could be a move, right? This could potentially be a good move, right? And something about this token I don't like. It looks very, very fake. This is what makes it look fake, by the way, in case you're wondering, like, why does this look fake? This movement right here, this is way too, like, this is way too unnatural, right? This doesn't happen. Anyway, let's just see if there's anything else. So, also, for a coin to have $2.1 million in volume, 16,000 makers, and only 400k market cap, red flag. Because as you can see, a coin like Snowball, which is 100% legit, has 8.7 million volume, 8,000 makers. So anyway, let's go into this coin Tuna, for example. All right. So if we look at Tuna, let's just see. Okay, so instantly, for example, yeah, you could consider this a thing, the free tap, the 3-point tap, whatever you want to call it, right? 1, okay? And again, depends on what time frame you're looking at, but I'm looking at 5 minute. Okay, this is 1, this is 2, this is 3. So from what I said, the next one should basically break through, and that's what happened, right? this is what you could do. And again, we're on a 5-minute time frame here, so it might look different on a 1 minute. But again, here, 1, 2, 3 breaks through. Okay, and then let's see again. So a lot of the time as well, it can work for the bottom as well. So for example, if it goes like 1, 2, 3, it'll be able to tell you whether or not it's gonna like next break through or potentially reverse. So again, as you can see here, reversed and then it flew up again. Okay, so it works both ends. Again, not all the time, but a lot of the time. All right, and yeah, like this is again with topping and bottom patterns. I didn't want to go too deep into like, yeah, this is 100% what it's gonna look like. This is 100% what it's gonna be, because it's not. It's never the case. But a lot of the time, these are just things that you need to pay attention to because it tends to happen. Like a lot of charts look very similar, and I've said this time and time and time again. Okay, I'm pretty sure you've seen a chart that looks like this, right, in the beginning before it runs, where it does this little move here, where it doesn't really look like it's gonna go anywhere, and then all of a sudden it just flies, right? We've seen it time and time and time again, right? Anyway, if you have any questions, let me know, and I will see you in the next video. Take care. So in this video, I wanted to quickly show you a live example of a sort of trade that I was in, that I spotted these kind of top or bottom patterns, and I thought, okay, cool, this is where I'm going to sell, this is where I'm going to put my stop loss, so on and so forth. I'll just give you a demonstration of my thought process when it comes to getting into a coin. So there was this coin I was called inside a crypto house, and I decided to size in around like the 3 million mark. So just to give you the color codes, so yellow means I bought, that's where I bought, so as you can see it says buy here. Red is stop loss, and then green is the sales. Now I'm going to break down everything, because it doesn't mean there's a stop loss here, stop loss here, stop loss here. I'm going to explain everything in a second. So basically I bought in around 3.5 mil. I'll be very honest, I really wish I bought in here, and I was going to. I looked away for, let's just say, an hour or whatever it took, and then all of a sudden it just flew up. And then as soon as I saw this fly up, I decided to buy in, because I knew it was going higher. I just should have prioritized it here, but I think I was busy and I just didn't end up doing it. Matter of fact, I think I was recording videos, so I just couldn't. So anyway, when I bought in, I'm going to show you where I set my stop loss, why I set it there, so on and so forth. So I set my stop loss, my initial stop loss, at 2.1 mil. Now let me take this red one away just so it doesn't confuse you, right? So I bought in around about here. Again, because I knew it was kind of going to go up, I was like, you know what, this has a lot more potential for it to go higher. And then I set my stop loss below the previous support, right? Or the previous low, right? As you can see there, there's nothing else that it's aligned with, because this is the previous low, right? So I know for example, if I was to buy in around here, and it was to go from, you know, it's basically an uptrend, as you can see, I'm talking a longer term time frame, like it's in an uptrend. If it was to do let's just say this, and then it was to go back down to here, I know for a fact we're probably going to end up going down, or even lower at least, before it goes back up. So I was like, you know what, let me set my stop loss here. So that's the first thing. Now obviously, as you can see, it didn't end up going down there. Now my stop loss was still there. Now what it ended up doing is it ended up running to about 6 to 7 mil, right? Now at 6 to 7 mil is when I started to look into, okay, should I take some profit here? What is going to happen, so on and so forth. Reason being is because I started to see this movement where it started to consolidate rather than actually move up. So as you can see here, although it was consolidating here, again, I already had conviction that it was going to move up. I'm completely fine with that. But then it started to actually move up here, right? Now when it stopped moving up and it basically failed to make a new high, that's when I started to be concerned, and I was like, you know what, now I need to start looking into, could it potentially top here, could it potentially go down, what could it potentially do? So what I started to look at, okay, are there going to be 3 sort of tops, right? Remember in the last video I told you usually it needs to bounce 3 times at a particular point for it to move. And funny enough, it actually did that. As you can see, it bounced once here, bounced once here, bounced once here. Again, you could more or less say it bounced around like 7 to 7.5 mil. I'd probably say around 7.5 mil. It bounced 3 times. Now the thing is with me, I didn't know whether to count, because obviously I didn't see this yet. I thought, okay, cool, could this be the first bounce? Could this be the second bounce, this one right here? And could this be the third bounce for us to now be going down? So I was like, you know what? Just to be safe, let me take some partial profit here. And that's why you see this green line, right? Now, if I just take away a couple things, 1 second. Give give me one sec, guys. So if I take away just the red lines and the blue marks, right? So as you can see, I saw these three bounces. So this one here, this one here, this one here, and I was like, you know what? We could potentially be going down, but not for sure, because at the end of the day, that could be the third bounce and then it's going to run. But I was like, you know what? Let me take some partial profits around here, right? It was actually around like 6.3 mil, okay? And then as you can see, it kind of went down and then it decided to go back up. Now, when I made this partial sell profit, what I did was I actually brought up my stop loss. So that's why you saw another red line here, is I was like, you know what? Cool. If I'm taking partial profits here, I don't want my stop loss to be down here, because like, well, that's no longer the new low, right? So what I did instead is I brought my stop loss up to here instead. Reason being is because if we look at it again on a big time frame, again, I'm on the 5-minute time frame, but if you look at it on a bigger time frame, like the 15-minute, you'll see that the new sort of uptrend is this, 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 this. So now, if you're seeing this, you would know that, okay, for it to then go into a downtrend, it needs to break this previous low, which basically means that my stop loss is valid, because it's like, if it breaks that previous low, we're probably going to go into a downtrend. So if it went like this, and then this, and then this, it'll probably do that, right? So I was like, you know what? Why not put my stop loss? Not only is my stop loss going below the previous low, but it's going to be above where I bought in. So regardless, I'm going to be in decent amount of profit, because not only did I take some partial profit here, but I'm also not going to take a single loss, because this is where I bought. So it works out a win-win situation for me anyway. Now, what ended up happening is, obviously, as you can see, it ended up actually running. Now, if we go back to the 5-minute time frame, I'll run you through my thought process here. So when it ran again, once again, as you can see, it ended up topping out at around 11 mil. I'll be honest, I thought it was going to top out around 10 mil, which you could consider it still did. Like, again, even if it went to 11 mil, at the end of the day, it's only 10% above. Like, you need to remember, you need to give like a 10% leeway to psychological points. Like, that's a general rule, like 5 to 10%. Like, it's never ever going to just fully top at 10 mil. Sometimes it'll go past it, sometimes it'll be just below it. That's why here I was like, oh, you know what? Maybe this is actually a top as well, because it's like within 10% of 7 mil. Same with this, it's within 10% of 7 mil. Same with this, right? Even this one, it's within 10% of 7 mil. It goes to like 7.7 mil and then it flies. Same thing here. 11 mil or 10.7 mil is still 10% within 10 mil, which is a psychological point. So when I saw this, I was like, okay, cool. Here's one top. Here's two tops. Here's three tops. I was like, okay, cool. Maybe now we are not actually going to go further than 10 mil. We could actually be dipping, right? And I actually decided to take a lot more profit here, right? And then, as you can see, it actually did manage to go. And I'll be honest, when I saw this, I was like, oh, maybe we are actually going to move here. Remember, I'm not fully out of the coin yet. But then I saw this move right here and it started to actually drop. As soon as I saw this mad drop here, I decided to take more of my profit here, and I got fully out of the coin, right? Because as soon as I saw, okay, it's a change in pattern, I knew, okay, cool, we're probably going to go a lot further down, right? And as you can see, we did. So I took some profit here, took all my profit remaining, around 8 mil. And at the end of the day, I made a decent amount of money. Like, on average, I made around like a 2 point something X, which on a sizable, on a buy of size, like a high buy, it's a decent amount of money, right? So I'm not gutted or anything like that. I'm not gutted that, oh, I sold a bit here, I could have just held until 10 mil, and so, because I made the right decisions every single time. Now, one thing that I am kind of gutted about is I didn't actually spot this reversal in time, because as you can see, it was actually 8:30 a.m. for me, 9 a.m. and I didn't see this in time. I didn't look at the chart, right? I would have probably seen this reversal and I would have thought, oh, you know what? I should have probably got in around like here. And now it's back at like 8.6 mil, right? Am I going to get in here? No. Personally, for me, I still think that it could go lower, because this is the thing, like, you could look at this. The reason I would have gotten here is because on a shorter time frame, it is still going up, right? It is an uptrend, right? As if we zoom into this, right, we can see that it is very much in an uptrend on a shorter time frame. So I could have easily made almost a 2x on this short-term run. But the reason why I wouldn't get into it now is because I'm looking on a longer time frame, because you have to look at a longer time frame around here. Because if we go onto like the hourly time frame, for example, right, you'll see that this could full on well still be a downtrend, because it could literally just be this, right? It could be this, full on well, right? It could be. So until this breaks the previous high, which is this, I won't have any confidence in getting in at this level. I mean, like at around 8 to 9 mil specifically. I don't have the confidence in getting in it, right? I would need to see it do something like this, and then maybe I'll get in around like a dip here. Now you might think, oh, but you're getting in at a worse position. Yes, but the risk is a lot lower because I can see clearly what the next the next move could potentially be, which is probably going to be towards the upside. It's probably going to run up now because now it broke the previous high, right? Again, entries are important, but it's not as important as having conviction and having reason behind why you buy into stuff, right? Like I'm sure you can see now, it kind of looks a lot clearer when you look at it on an hourly time frame as to what it could potentially do. Because right now we could see it either do something like this, where it goes this and then this, or we could have just seen, like, again, a run up, and then now we're about to see a run down, right? And I would much rather know what's going on than to, gamble and kind of second guess what's going on, right? But anyway, just wanted to show you that as a quick example as to kind of what my thought process is behind trades. We'll see if we'll see what this ends up doing. Is it going to end up dipping again, or is it going to end up flying? Who knows? We'll see. But anyway, other than that, if you have any questions, let me know, and I will see you in the next one. Take care. In this video, I'm going to be going over how to know when the pump is over, right? Now, one thing I want to start off by saying is, can you know whether the pump is over? No, but you can make a very good decision as to whether you think you should get out now or not, essentially, right? You can make a great assumption, but no one can ever predict the top. But there is a lot of ways you can actually determine whether the top is near or not, right? Now, I'm going to go over two things. One is obviously the chart, and then two is, other components that factor into it, right? Because at the end of the day, it's not just the chart. It's to do with the narrative. It's to do with the coin in itself, and so on and so forth. So before I get onto the chart itself, right, you need to understand, before you even look into the chart, why is the coin running in the first place, right? So for example, this coin is a 6-7 coin. It's a trend. It's an evergreen trend. It's something that is timeless, right? There's no limit to it. Whereas if this coin was to do with the Trump election, and the Trump election is tomorrow, then you shouldn't expect this to top, I don't know, in a week's time. It will probably top today or by tomorrow maximum. And one thing you need to understand as well, a lot of the time people think that when something happens, that's when the coin will pump, but it's usually the opposite. When that thing happens, that's when the coin tops. So for example, like, a lot of people tend to think that, let's just see. For example, let's just say there was a Trump election coming up in the next 2 months, and there was a coin called, president election coming up in 2 months, and there was a coin called election. The coin isn't going to pump on election day. It's going to pump leading up to it, and realistically, probably the week before or a few days before, that's when it's going to top, because the event happening wasn't the reason why it pumped. It was the anticipation and the hype leading up to it that made it pump. It's why they say, that quote, I forgot what it's called now that it's come to mind, but something like sell the news, right? Because when something actually happens, it's like, when that thing happens, there's nothing left to come. So why would it run anyway, right? So for example, let's just say this is to do with an election. If it pumps all the way like this, leading up to the election, and now the election happens, well, okay, so what's next? Well, nothing. So obviously, it's probably going to stop pumping before the election, because most of the smart traders know this. Whereas all the retail traders, all the noob traders think, oh yeah, when the election happens, when Trump gets elected, when this happens, that's when it's actually going to start pumping more, and then I'm going to sell. No, that's not how it works. Right? So take into account, what I'm about to show you in this video to do with charts is nowhere near as important as the actual coin itself, right? Now, there are a lot of different components, and obviously it's to do with the analysis of the coin and so on and so forth. Like, if it's a quote-unquote utility coin, which there isn't many of, but like if it's a quote-unquote utility coin, again, what is it that, what are we leading up to basically that could cause a pump and then that could cause a top as well, right? So obviously, if it's to do with like a platform launch, again, same thing. You'll probably see a lot of the time, let's just say again, this coin is a platform launch, right? A lot of the time, leading up to the launch is when the pump will happen. And then when the launch happens, or when the launch is about to happen, it will start to dip, or it will start to just like consolidate, and then it will start to drop. And don't get me wrong, then over time, it could start to move again, because then the smart traders are out, the retail traders panic, the smart traders realize they're now able to get in at a better price, and then it flies again, right? The issue is with most people is they think the opposite. They think, oh, the major event is what's going to create the pump. No, the major event is what's going to create the top. All right? So take that into account. Now, how do you know based on the chart itself whether a coin has topped or not? Now, there's not really a set way to know, but a lot of the time, it's just common patterns, right? Like, again, obviously, this is in an uptrend. So up, down, up, down, up, down. As you can see, up, down, up, down, up, down. And this here, as you can see, it did a high low here, but then it failed to break the top again, and then it went even lower than the previous low. That is a big sign that, okay, cool, you know what, this will probably enter a downtrend now, right? So let's say, for example, you decided to stay into this coin throughout this dip. I would have seen this dip and seen, oh, it broke lower than the previous low. I'm going to sell as it retraces. So I'd probably sell as it goes up back up here, and probably sell somewhere around here, because I know for a fact that this is going down now because we just changed pattern. Right? If it doesn't, it doesn't. But at least at the end of the day, I'll be safe. Right? This is the thing with trading meme coins. You're not trying to fight yourself when you're making good decisions. You're only trying to fight yourself when you make irrational decisions or decisions without reason. If, for example, you were in this coin from here, it went up all the way to here, you didn't sell because nothing was giving you the sign that, okay, cool, it's topped out, and it dips like this here, and you sell here, you shouldn't be mad at yourself if it runs again, because you made the right decision. Right? Yeah, you can be gutted, like, oh, I wish the chart didn't do that, so I didn't have to sell, but that's part of the game. At least you made profit at the end of the day, because you're never ever going to be able to time the tops perfectly. And 99.9% of the time, you are never going to sell the top. So you need to be happy with like selling at the right points based on your analysis, based on your decision making. All right? Same thing here, for example. Like, look, this coin, uptrend. I wouldn't have considered this a top because it didn't go below the previous low, which I've considered this one, right? It kind of bounced and it continued going up. So here I would hold. However, when I start to see this here, right, I'll be honest, I would have probably sold around here, because look, it does go into a mini downtrend, but then it reverses, right? But I would have probably sold here. But again, this is what I'm saying. Like, imagine me selling here and then seeing the coin do this again. I'd be mad, right? But again, it's part of the game, right? You'd rather be safe than sorry. Like, this is what meme coins are about. Because then again, it's like, what if you make the same mistake later on? This is the thing. You're getting into these habits of taking profit when it makes sense, so you don't get into the habit later on of thinking, oh, but what if this happens again? So for example, you might have seen this, and imagine, cool, you sold here, you ended up buying back in because you saw it go like this, and you saw it dump below the previous low, and you're like, oh no, it's just gonna do the same thing it did earlier. And then, all of a sudden, goes up. Again, you think the same thing. And then it shoots back down and you're like, oh, damn, I lost most of my money now. And this is what a lot of people tend to do. They tend to be so irrational and tend to think that the market is on their side, that the market is just going to repeat itself over and over and over again, as if they just know what's going to happen. But the truth is, you don't, right? And this is the thing with meme coins. It's a game of not knowing what's going to happen next, but trying to compile a bunch of evidence that this could potentially happen next, right? Like, no one can predict that, oh, this is going to happen and then it's going to go back up. No one predicts that, and no one predicts this, right? Like, obviously I'm on deck screen now because it's just simpler to show you guys, but if I go onto this actual chart on like Axiom, I'm almost certain I can see a bunch of people that I'm copy trading sell around here, sell around here, sell around here, and so on and so on. Like, you see most of the best traders don't even sell the top, right? Matter of fact, I see a lot of good traders sell around here or here or here. And that's because they are so used to taking profit that they don't care how high it goes, because at least they've made profit at the end of the day. All right? Now, don't get me wrong. That doesn't mean you shouldn't get into the habit of letting coins run. But that's why clipping is important, right? Taking profit on the way up. You should never, ever, ever sell all in one go, right? Unless it's like a sell the news type of thing, then yeah, cool. Or something really bad happened, then maybe, right? But like a lot of the time, if you see a coin pump like this and you're like, okay, cool, you know what? Just dipped here. Take a percentage here. You would have probably already taken initials at like 2x. Take a percentage here. See what it does. Set a sell limit here so that if it drops below this and you're like certain, okay, cool, if it goes below this, it's probably just going to dump. Cool. Take 100% here. But at least if you're going to take the profit here, take partials. So that if it goes back up, you still got some money in here. And then you can take it again here when it starts to dip again. And then again, you can take here when it starts to dip again. And then again, you're taking profit on the way up so that at the end of the day, you're going to have made more by taking on the way up than you would have if you just took 100% here, right? And then again, you can like literally move your stop loss or your sell limit up. So for example, here, you would have taken profit here, you would have set your sell limit here, but it didn't touch here. Then it flew up to here, so now you know, okay, cool, you know what? Let me set my sell limit below the previous low, which is here. Let me set it here. It didn't go to it. All right, cool. Next one, boom, here. Now you set your sell limit here. And it's like every single time you're raising the amount of profit you could potentially make. And you can see this time and time again with different coins, right? Again, you wouldn't have predicted that if this dips here, like here, that it's going to go back up to here. So take a bit of profit. Let it go back up, take a bit of profit. Now, over here, maybe you would have set your sell limit here. It sells out, cool, fine. But at least you took your profit here and here. And if it goes back up to here, that's fine. You still listened to what was meant to be listened to. You did what was meant to be done, right? Because the last thing you want is for you to not take profit, thinking it's going to run even further, and then it just dumps back down and you're now in way less profit than you were before, right? So yeah, the answer to the title of the video, you know, how to know when a pump is over. You won't. You never will. But you can make good decisions based on, number one, the narrative, the trend, the news, whatever it is you're in the coin for. You look into the community, you see what is driving volume in the first place, and what could potentially cause this to die out, what could potentially cause this to run. Are they waiting for an Elon Musk tweet? Are they waiting for an event to happen? What is it that they're waiting for? Because a lot of the time, whatever it is that they're waiting for is going to cause it to dump. And if that thing happens, it's going to cause... Don't get me wrong, if Elon Musk tweets, right, that's going to create a massive pump. But you better get out of that pump as quickly as you got in, because that pump isn't going to last long. Especially if it's like one of them, it's like a one-off tweet. Like, you know for a fact it's going to be a one-off tweet. And yeah, that's basically the answer to this video. If you have any questions, let me know, and I'll see you in the next one. Take care.
In this video, I'm going to be going over meme coin phases, or also known as the lifespan of a meme coin. Now, what I'm going to be doing in this video is showing you examples of the different phases and the different lifespans of meme coins, and hopefully it should click. Pretty self-explanatory. The whole point as to why I'm doing this video is for two reasons. One, so you understand exactly what I'm speaking about when I speak about phases in the upcoming videos. And number two is so you understand exactly what phase you're getting into when getting into a specific meme coin, just so you can understand whether it's the right meme coin to get into or not. Okay? So, a meme coin almost always ever has three phases, right? Only ever has three phases, I should say, right? Phase 1, phase 2, and phase 3. Now, this is what a typical three-phase lifespan looks like. And you can literally check this across so many coins. Now, obviously, like 0.0000, you know, endless 0.1% of coins actually make it to phase 3. But a lot of the time, the bigger the phase, so as in like, the higher the phase number, the more money you could potentially make. Like, I'm talking like, you're more likely to make more money in phase 2 over phase 1. You're more likely to make money in phase 3 over phase 2 and phase 1, and so on. Okay? And I'll show you exactly what I mean, right? I've even made a YouTube video on this, I think, a long time ago. Definitely worth the watch. I can't quite pinpoint which one it is. But again, if you haven't watched my YouTube videos anyway, you should, because a lot of them are very, very educational. So, as you can see here, on this particular chart, which is still climbing, there is three tops, right? We could see one top. In fact, let me just draw a circle. We can see one top right here. We can see one top right here. And we can see one top right here. Now, what's different about this chart than most other charts? I mean, look, if I go onto a random coin like this, for example, hopefully this helps me show the example. Like the tops are just normal, right? We're on a 1 minute time frame. You know, it's just normal sort of chart movement, right? And this only launched about, you know, a few hours ago, whereas this one, you know, it's been out since November 2024. Now, the difference between these tops is, first of all, how spread out they are, and second of all, how drastic the move was from the previous top. And what I mean by that is, like, look at the movement. It doesn't go from this top and then just consolidates a bit and goes all the way back up. No, it literally dumps, almost bottoms out before it does another run. And again, the same thing again. It literally dumps, bottoms out, and then it does another run. These are phases, right? This is what's common when it comes to transitioning from a phase 1 to a phase 2, from a phase 2 to a phase 3. A chart will generally bottom out, almost as if the market has forgotten about it or it's on the verge of disappearing, and then out of nowhere, it will just explode. And that's when it's entering a new phase, right? So as you can see here, this is phase 1, where it literally went from about, where did it go from? Wherever this is, obviously, basically launch, to about 83 million. Then it dumped all the way down to, again, single digit millions to 320 million. And then it dumped again all the way down to about, again, almost single digit millions. And now it's at 470 million. Now, remember what I said. Each and every single phase is a way bigger opportunity to make more money than the previous phase. And you might be thinking, well, no, that's not true, because if I got into this at 50k market cap, you know, obviously if I actually like full on see where this launched, it probably launched around, like, again, 50k market cap or whatever it may be. And you might think, well, yeah, from 50k market cap to 80 mil, yeah, you would make way more money. But it's like, no, because number one is the amount of capital you can actually put in at 50k is nowhere near the amount of capital you can put in at 5 mil. But again, it also brings the argument of, like, yeah, but I can put in, you know, $1,000 at 50k, and then at 5 mil it will be 100,000. Yes, but what is the likelihood of you holding a coin from 50k market cap to 80 mil? Very, very, very small. However, now that you're watching this video and you understand phases, you now know that a coin that you get into at, let's just say, 4 mil, that's about to enter a phase 2, can very well go to 300 mil. And you're a lot more likely to put in 5k, 10k, 20k, or however much money you've got, whether it's $500, you're more likely to put that into this and hold it for a long period of time, because you know what phase 2 and phase 3 is capable of. The issue with phase 1 coins is it's unpredictable. As far as anyone can predict where a coin is going to go, no one actually, like, obviously no one knows even for like phase 2 and phase 3, but the point is, like, no one can actually have an idea as to where a coin can go. Like, no one knew this coin was going to go to 83 mil. People could have assumed that it's going to go to like 1 mil, 5 mil, 10 mil, so on and so forth. No one knows how high it's going to go. Whereas with phase 2 and phase 3 coins, they are very likely to go to the tens of millions and even the hundreds of millions. And we've seen it over and over and over again. Now, don't get me wrong, not every phase 2 and every phase 3 goes into the hundreds of millions or tens of millions, but it is common, especially on the bigger coins like Pippin, for example. Okay, so let me go back to what I was saying. For example, if you was to get in here at, let's just say, again, like 5 mil, if you rode it to just like, let's just say 250 mil, that's what, 50x. Now, the thing is with 5 mil, you can put in 10k and, you know, 10k doesn't move the market crazy at 5 mil. That's completely fine. So you can put in 10k at 5 mil, and by the time it gets to 250k, you've now made 500k. That's how you see people making these big moves. People don't put in 5k at 50k market cap and ride it to like, you know, a mil and make 50k. You can't do that, right? Let's actually give a realistic example. No one will ever put in 5k at 50k market cap, ride it to 2.5 mil and make 500k. You can't do that. There's not enough liquidity, right? With a coin like this, you can. And that's why these phases are important. Same thing here. If I was to go into this coin around, let's just say around here, 14 mil market cap and I rode it all the way up to, again, let's just say 450 mil, I would have made almost 3,000%. Now at 14 mil market cap, if you have the right amount of capital, how much do you think you can put in? A lot, right? And you're probably wondering, well, how do you actually know whether a coin is going to do this kind of run or not? Now, there are going to be videos, as you've probably seen already, there's videos after this saying how to spot phase 2, phase 3 opportunities, and that's exactly what we're going to cover, right? The only purpose of this video is to show you that this exists, these phases exist. Like if I go into this example, for example, Wojak. Now, again, you kind of need to use your own judgment as to whether a coin is in phase 2 or phase 3, especially because not every chart looks the same. Sometimes they do, but like, for example here, could you consider this a phase 1? I don't know. It really only lasted a day and then it just bottomed out, as you can see. I would more or less consider this a phase 1 because again, it only went to a couple mil market cap. And I'd then say this is a phase 2, where it went to like 9 mil, 8 mil, so on and so forth. So again, and if we literally like make this like this, could you potentially envision now this going like, again, it could even bottom out here and then it just goes like this? Yes, 100% you can. And again, what determines these kind of things, and again, is what I'm going to speak about in the next video, is things like community, things like distribution, things like, catalyst, what could potentially cause this to actually have a phase 3 run, so on and so forth. And you need to kind of use your common sense. No coin in its right mind would be at a mil market cap after launching almost a year and a half ago, over a year and a half ago, May 2024. So is a phase 3 possible with a coin like this? Yes, 100%. Okay? Same thing with this. If we look at this now, for example, right? Flying ketamine horse. I actually called this coin, right? We did about like 40x on this or whatever it may be, right? As you can see, I personally consider this a phase 1 right here. Right? Phase 1 bottoms out and then it starts to run again, right? And then what did it run to? It ran to, it ran to about 10 mil, 12 mil, and now it's starting to bottom out again. I personally wouldn't be surprised if this coin bottoms out maybe to about a mil and just starts fluctuating around here, and then all of a sudden, after a couple of months or however long it takes, it then just flies to like the hundreds of millions, not even hundreds of millions, like tens of millions, whatever you want to call it, right? Whatever it goes to. But the point is, I wouldn't be surprised, okay? And you're probably wondering like, well, how long do these phases last? I mean, they can last anywhere from days to weeks to months, as you've seen, right? Like if we go back to Wojak, it literally took over almost a year for it to run again, right? And then from the second bottom, from May 2025, to the phase 2, it took about 4 months, right? 3 to 4 months for it to do another run. But then again, you go to like Pippin, for example, it was out for about a month when it bottomed out, and then soon after it went into phase 2. And after it bottomed out after phase 2, it took about 8 months, 9 months, 10 months, however many months that is, for it to do a phase 3. It all depends. But there will be signs when it could potentially be going into a phase 3. So for example, I'll be honest, I would have probably been fooled by this, thinking this is a sign. But again, you need to look into not just the chart, a lot of other components as well. Community, what's the driving factor, what's the catalyst, market conditions, so on and so forth. Same thing here. As you can see, like this would have given me even more confidence, because as you can see, it made a new high, and it made a higher low, and then it didn't even make a higher high. That's the thing. But like, it still showed upside potential, and then as you can see, it just started shooting up. Right? That's something you want to look out for. And the thing is with these coins, you don't want to look at the minute time frame. You want to be looking at the longer time frames, daily time frame ideally, or even like 4 hours, 6 hours, whatever kind of longer time frames you want to look at. But hourly time frames are not going to give you the information you want to look at. Okay. Same with, let's go on to a coin like Franklin, for example. Right? Franklin has been out since 1st of December. Now again, this coin is a bit difficult for you to determine whether it's in a phase 1 or phase 2. I personally think this is in a phase 2. Why? Because as you can see, it's been out from 1st of December, and for about a week it ran until it kind of bottomed out, right? It didn't bottom out too much. It was still at 1.3 mil, but then all of a sudden it started to run, and it went all the way to 24 mil, right? And now it's starting to bottom out again. I personally wouldn't be surprised again if this bottoms out. And by the way, bottom doesn't mean like 100k, 50k, 150k. No, it means just like it just flatlines, but it can flatline at 1 mil, it can flatline at 5 mil, it can flatline at 2 mil. It's relative to where it went. So as you can see here, for example, this coin went to 24 mil, so it makes sense for it to flatline around like 3 mil, 2 mil, 1 mil, right? Same way here, it went to like 5 mil, it's completely fine for it to flatline around like 1 mil. Whereas if you go to like a coin like, let's use Wojak as an example, right? It went up to only 1.6 mil, so obviously it's going to flatline around 200k, right? You go to Pippin, as you can see, first it went up to 80 mil. This is not going to flatline at 100k. What it will flatline at is like 6 mil, 7 mil. Again, same thing here. Went up to what? 300 mil, let's just say. It flatlined around like 10 mil. Again, it's all relative. A coin that's going to do a phase 3 or a phase 2, in fact, let's just say phase 3, more likely than not, will never ever flatline at like sub 100k. Because that means community doesn't even exist at that point. It's just people that left their bags in thinking, oh, imagine this runs. But it's the believers that are holding at these high market caps that will make you, that will essentially be there when a coin runs, right? That's why it stays at these high market caps, okay? Another coin you want to look at, I'll use as an example, for example, is Dino, right? Dino launched at 5th of December. It ran up until like 10th December in phase 1, in my personal opinion, right? Went up to around, again, this is a very small phase 1, went up to around 300k. You could say it kind of flatlined around here, just consolidated, and then it started to run. Now it's at 1.2 mil. I'll be honest, if this coin does does last a long time, I'd even consider this as a phase 1 in itself. Like a phase 1, as I said, it can last days, it can last weeks, right? Very rarely does a phase 1 ever last months. But like, again, this could be the coming end of a phase 1. Like it could literally flatline around here somewhere and then launch again. Or again, as I said, this could have been the phase 1 and now it's preparing for a phase 2 where it just shoots up and goes to, let's say, like, I don't know, 5, 10, 15 mil, right? Who knows? But it looks like it. Like the best way for you to do it is for you to zoom out on the chart and just look at it from a further standpoint. Like again, when I put it like when you see it like this, it doesn't look like it's flatlined, right? But when I do this, it does look like it's flatlined now, right? It does look like now this was potentially the phase 1. It flatlined and then it went into a phase 2, right? And then again, this could even just be part of phase 2, right? But yeah, hopefully that makes sense. The whole point as to why I wanted to show this video in particular, as you can see, you probably didn't really get much out of like how to get into these phases just yet. But the point is, I want you to know what the differences between the phases are. Okay? So, other than that, if you have any questions to do with the phases, do let me know, and I will see you in the next session. Take care.
In this video, I'm going to be showing you how to find phase 1 coins. Now, this is probably going to be the easiest out of the two, out of the three, I should say. Reason being is because phase 1 coins are probably the coins that you are aware of the most and the ones that you're getting into the most. Now, in this video, I'm just going to show you, and also the next 2 videos, I'm just going to be showing you how to find them, not how to analyze them and so on and so forth. That comes in a later video because I'm going to be breaking down individually how to do each step. So for example, how to analyze charts, how to analyze like X communities, whatever it is that you basically need to analyze in order for you to determine whether a coin is good to get into or not. For these videos, I'm just going to be showing you how to actually find these like phase 1, phase 2, phase 3 coins. Okay, so as you guys know from the previous video, I personally use Axiom, and Axiom is the only place that I would use to actually find phase 1 coins. Now, phase 1 coins tend to be about a week old maximum. And by that, I mean literally anything from a second old to a week old max, right? After about a week, there can still be some coins that are still in phase 1, but the likelihood of you, first of all, the likelihood of you to getting much opportunity out of it is very, very low, because it'll probably start approaching, you know, that drop that it does before it then goes into phase 2, or it would have already done its run. Okay, so for example, funny enough, I recorded this video earlier where I went over Dino and I was telling you how like this kind of looks like a phase 1, but this could also be classified as a phase 1. Personally, for me, after even looking at it, since I actually recorded a video, I did a 2x. Now that I'm seeing this do this, I stick to my guns, and I personally can say that I think this was phase 1, and now we're going into a phase 2, right? And so again, it's like, imagine so this launched on the 6th of December. Imagine you got into it on like the 11th. Yeah, you could have got into it at 580k, but it's like you were only going to make a 2x before it starts to drop again, right? And then obviously now it's going to run. But like, you got what I mean? Like, with phase 1 coins, upside potential should be a lot higher than just a 2x, right? Especially if you get in like early, because a lot of these coins as well that do like, phase 2s and phase 3s, their phase 1s are actually good as well. Like, I don't want you to ever think that, oh, phase 1s only go to like 100k and so on and so forth. I mean, they can, if something was to enable it to go into a phase 2 or phase 3, but a lot of the time, these coins that go into like phase 2 and phase 3, they tend to run a lot further. This is obviously an exception. This only ran to 290k, and this is why I kind of questioned, is this a phase 1 or phase 2? Because it's very weird for a coin to only go to 300k and then bottom out and then run. It's not really weird, it can happen, but it's like, generally I'd expect it to have a lot more hype than this in the beginning for it to then go into phase 2 and then a phase 3. This is just from like majority of coins that do these phase 2 and phase 3 runs. But anyway, as I mentioned on an earlier video, if you haven't watched the earlier video, by the way, and you skipped it, you need to make sure you do. Otherwise, you're not going to know anything I'm speaking about. But these are the different ways you can find different pairs. So you obviously got new pairs, which is pairs that have literally just launched. Then you've got final stretch, and then you've got migrated. So final stretch is basically anything under 80k, 70k. It depends, because it depends on Solana price. So now, for example, as you can see, this will probably migrate around like 50k, so 51k. But back in the day, like a month, 2 months, 3 months ago, they were migrating at like 70k, 80k when Solana was a bit higher in price. So yeah, obviously anything below final stretch basically will be under 51k. Anything in migrate, it will be above. Now, personally for me, when it comes to finding phase 1 coins, I don't just go based off that metric. I actually like to specify it a bit more. So for example, in migrated, I will put like a minimum market cap. As you can see, I put a minimum market cap of 90k. I don't want to get into stuff that have only just migrated, because a coin that has just migrated doesn't give me certainty that, okay, this could potentially be a runner, because there's a lot of uncertainty, right? As you guys know from what I say, whether it's in the private group, whether it's in the inner circle, you know that I say after migration, it's extremely risky because it can go either way. Like, people either dump their bags because they were waiting for migration for them to sell, or it can then start to run. And you're basically gambling at that point, because it could go either way, right? And you don't want to gamble, right? You want to make a strategic decision, right? So what I personally do is I make sure I set at a minimum 90k, because if a coin has reached 90k or beyond and has managed to stay above it, it's a good sign. And that's exactly what you want to go for. Okay, if a coin has dropped below 90k, it probably isn't even worth you getting into, because there's not enough traction for it to even stay above 90k. Like, anything below that is just risky, especially if it's already migrated. Okay, so that's for the migrated section, right? And in case you're wondering, like, oh, but what's the maximum in migrated section? Like, how much should I maximum get into? It doesn't really matter, right? What matters is you are able to. The thing is with meme coins, yeah, what you're doing is you're trying to gather as much evidence as you possibly can to give yourself reason to get into a coin, right? So market cap alone isn't enough. So what I mean by that is, like, yeah, you can find a coin at 111k, but you can also find a coin at 900k. And the 900k one might give you more reason to get into it than the 100k one. Even though the 100k one seems like it's got more upside because you're early, well, what if the 900k one has great community, has an event that's potentially going to come that might shoot it like another 10, 20, 30x? They anticipate Donald Trump is going to tweet about it or something like that. Like, I'm just making this up right now, but you get what I mean? Like, you need to put like puzzle pieces together to give yourself reason as to why you should get into it. If you find a coin, for example, this one, where it's like, had to take profit, sir, and all it has is a community, and just it's at 300k, and like nothing else is telling you that this could potentially run, right? That isn't enough reason for you to want to get into it. You need to give yourself more reason, okay? And you should also be doing the opposite as well. What are reasons that it might not run? Okay,
So for example, the example I just said where it's like, oh, if Donald Trump tweets. Well, what if there's a coin where Donald Trump has already tweeted and that's what caused it to go to 900K? It's like, well, what's next then? Is there anything that can even come after that that can make it go even further? Maybe not. So again, you need to always reason with yourself as to why you should get into a coin and why you shouldn't. Okay? It never only depends on the market cap, right? Now, this is where phase twos come in and phase threes come in. Because again, a coin that went to a 900K market cap could easily, I'm just going to use this as an example, right? Like, let's say, for example, a coin that went to like a million market cap as listed here, it could easily go down. But then imagine Donald Trump tweets here. Well, yes, now you can potentially get in, right? And it's an especially good sign if a coin, like this one, for example, on the 12th of December, it took literally about 4 days for it to dip, right? From 12th December to 16th December, it took about 4 days for it to dip. And it barely even dipped. Like, it dipped like 60%, which is a substantial dip, but it's like it never dumped to like 100K or to practically zero, right? And as you can see, it is a like support point. As you can see, it's bouncing off here, it's bouncing off here, it's bouncing off here. It's a good sign, right? And again, this is giving me more reason as to why this could potentially have run, right? And again, you might like be wondering like, oh, what would make me think it would bounce off here though? Well, look, this was the previous resistance because it bounced off here, right? Remember, we're looking at this from a 15-minute time frame. If I was to put this on a 5-minute time frame, we'll be able to see a lot more clearer bounces, right? Look, 1, 2, 3, 4, 5, 6, and then 7, but it dipped just below, so on and so forth, right? Look, again, more, 8, 9, like so many bounces. And even here, like, as you can see, 1, 2, 3 bounces, 4 bounces, you've considered these bounces, and then it broke. So now you know this is going to turn into the new support, right? If you don't know what I'm talking about, go watch the first call recording. You know exactly what I'm on about. But yeah, anyway, point is, with the migrated section, give yourself a lot more reason as to why you should get into it. Okay? Again, if you're wondering what those reasons are, I am going to go over them in later videos. All right? Final stretch and new pairs. Now, with final stretch and new pairs, let me start off with final stretch first. So final stretch, what you're doing is you're doing similar to what you do with migrated, where you're keeping that range of where you want to get in and where you don't want to get in. What I mean by that is, like, for example, personally for me, I wouldn't get into a coin that's at like 14K market cap because that's not enough for me to determine whether or not this coin could actually do much. Like, this 14K market cap signals to me that there's not enough people in to give me conviction that a lot of people have confidence in the coin. And you might be wondering, well, yeah, neither does 20K, neither does 25K. But no, the point is, though, there are a lot more people in a coin that is at like 20K or 25K, right? Or 30K or 40K and so on and so forth. Like, as you can see, this coin already went to 35K. There's a reason as to why it dipped down to almost like 14K. And the reason why I wouldn't want to get into this is because if it does end up going to zero, or not zero, but you know where it started from, which is basically here in a very short space of time, which it easily can, that's minus 73% already. And it can easily do that in one candle. And I'm not willing to risk that. Right? So with these type of coins, yeah, what I would personally look for, let me see what I've actually set so I haven't set a market cap here, probably because I don't want to actually miss anything that I could potentially get into early. But what I'm looking for here is a coin that is at least around like 30K market cap, 40K market cap, where it's like, I can still make enough money between now and it migrating, and then I can make a decision. So that if it does migrate, and then it starts to dump a bit, at least I have room to get out, right? Whereas again, if I get into a coin here where it's at like 60, 70K, it just migrated, it could dump and I don't have any room to get out. I'm basically going to automatically be at a loss if it goes below migration point. Okay, so with here, I only look at coins around like the 30K market cap, sometimes even 25K, but around that or beyond, because that gives me a lot more confidence. What I also look for is how long it's been out for and what it's been doing in that time frame. So for example, I won't look at coins that have been at like, you know, let's say 30K market cap, but they've been out for like, let's just see, let's just say like 2 hours. Like, it also depends on the chart, but I need to determine like what is it doing and why is it taking so long for it to potentially migrate.
So that's when you give it, again, you gather those reasonings. Whether you go into the community, you look into whether it's like bundled, whether it's just a team fabricating the push, because a lot of the time you need to understand it's all psychology. You need to kind of try and read the minds of people that are in these coins. Not many people have patience for them to wait in an hour for a coin to migrate. So a lot of time when you see a coin that's at like 30k market cap, that's why you barely see any here that have been out for an hour and are like 30k market cap. Because a lot of coins that are at 30k market cap won't last there for an hour unless it's the team that are telling everyone to hold. We're going to push this. We're going to push this. And that's not kind of the coin that you want to get into, right? You want a coin that has that organic traction or could potentially have a catalyst that allows it to be pushed a lot higher, right? So that's final stretch. Again, I am going to go over later on, like what determines a coin and so on and so forth. New pairs. This one is extremely high risk as well, but it does depend on where you get in, right? You can make it low risk if you get in on the extreme low end, but you need to be extremely quick. And a lot of the time, coins that are actually good, to be extremely quick is a bit hard. But for example, if you look at my metrics here, I do put the minimum market cap as 8k because anything below that could just be a dead coin. But like, for example, this, right? Look, it's already on 9k. This is probably a coin I can get into. The issue is with these though, is if you don't get in fast enough, you could lose the opportunity. Like we'll buy this now just for the sake of it, right? Like you'll lose the opportunity of getting in early. Like look, it literally went from 9k to 10k in the space of like a second, right? It's gone to 12k. Like for you to have to look into this, I didn't even get time to look into this and it went to 12k from whatever it was. Now, from what I can see, it's probably a famous dog. Yeah, it is, right? Only 59 likes, but 770k followers. This could do decently well. It's got some track wallets, but with new pairs, this is kind of what you're doing. You're just trying to take a you're jumping in before you can actually have a look at what it could potentially provide, unless you're willing to risk getting in a lot later. This doesn't mean you're gambling because you can easily just get out, but it means you're at a far higher risk of potentially losing, but your loss will probably be a bit smaller because there's only so much this can lose by. So for example, I got in at 10.2k. The max this will go down to is like 5k and I'll lose half of what I put in. I don't mind that, right? But it's like, imagine it went from 10k to like 40k in the space of, again, a few minutes. It would have been worth getting into, right? So yeah, that's the thing with new pairs. New pairs, it's like you need to get in extremely early. Like look at this one, launched a minute ago and went to 17k already. Like you don't have much time to actually look into the token, right? A lot of time as well for these new coins, I will look on a second time frame. So for example, I might have seen it here at 8k. Look, literally like 10 seconds later, it's already at 11. And then 10 seconds after that, it's already at 14. You could have easily made it 2x in the space of, 20 seconds. So again, with new pairs, a lot of the time, you are getting in before you actually do your research, but only if you get in early. I wouldn't get in here and do research, 17k. No. Ideally, sub, let's just say 10k, get in, do your research. If you don't like the token, get out. That's it. If you do it here, by the time you go and do your research, it could drop back down to like 10k and you've already lost like 45%. And then again, imagine it just drops all the way down to like 5k, you've lost like 75%. I know it's like, again, even here, for example, I've already lost like 50% on this or 45%. But again, I could have gotten out, right? I've just been talking to you for the whole time. But it's like my risk is a lot lower here because it can't really go any lower than this, all right? And the thing is with these type of coins as well, like I know I can full on well, if I'm happy taking that 50% loss, I can hold it here and just wait and see what it does, right? And I know it won't really go any lower than minus 50%. If you're happy with that, then fine. But remember what I said in the last video. What I was saying in the last video is with these type of coins, you want to put less risk in, right? So don't put in, 2 to 5% of your portfolio into these type of coins. With these type of coins, you're putting in like 1%, right? 0.5%, 1.5%. That's why, for example, like I use this account for demonstration purposes only, so I don't get copy traded. That's why, for example, I put in 0.5% on and I didn't really care about it because, again, that's not even 1% of my portfolio, right? But these are things that you need to bear in mind. And yeah, that's how you find phase 1 coins. Now, in terms of how to actually analyze, as I said, I am going to go over it. But if you have any questions to do with this, let me know. And other than that, I will see you in the next video. Take care. In this video, I'm going to be showing you how to find phase 2 coins. Now, similar to the last video, This isn't going to be a video on how to analyze them or anything like that. It's simply going to be how to actually come across them so that you can then analyze and look into potentially getting involved in them. Okay, so for this, I'm personally using Dex Screener. Again, as I said with Axiom is better for those maximum week old coins in my opinion. So again, phase 1 coins. For phase 2 coins and even for phase 3 coins, you're going to see Dex Screener works a lot better. So what I'm going to do in this video is I'm going to show you how I personally come across potential phase 2 coins. Quick demonstration. So first of all, what you want to do is just go onto the main page, which is the trending tab. What I like to do is rank by trending 24 hours. Just because you need to understand with these phase 2 and phase 3 coins, they're not going to have as much volume or momentum as like newer coins, right? So you need to give them a bigger time frame in potential movement. So for example, if we go on to like FKH, for example, right, which did like a phase 2 move, as you can see, went all the way to 11 mil after literally flatlining around like 100k. As you can see, when it started to revive itself, volume wasn't crazy. And again, this is over a period of like 3, 4, 5 days when it started to pick up and then it flew. So you need to understand that the coins that you're trying to look for are not going to have crazy volume all at once. So you kind of want to give it space, because if you put trending 1 hour, that 1 hour might not have been a time where that coin was trending at all. But trending 24 hours is going to be useful because you're going to be able to see, oh, did it have any movement in the past 24 hours, right? So what I then do is, again, the reason why as well, like you ideally want to do 24 hours and like not do by, you know, buys or transactions or anything like that, is you actually want it to have volume as well. Like, you don't want to find something that is literally completely dead and no one's really paying attention to. Yes, you might be able to find something out of luck, but like you want something that people still have their eye on, right? So once you do that, what I personally like to do is I literally just open every single thing. Oh, one thing I forgot to say is I also add a couple filters. So what I like to do is minimum market cap 100k. Now, this is just my personal preference. Anything lower than 100k is risky in getting into. I don't think it will revive itself. But again, as we've seen with Flying Ketamine Horse, it did literally go to like very, very low numbers. But again, go into like sub 100k. Personally, I haven't seen many coins be revived from below unless it was like a one-off or like an outlier. Okay, so minimum 100k, and then per age, I'd make it minimum 3 days, and then I do maximum 2 months, which is 1,440, right? That's what I personally do. Don't get me wrong, you can still find, like, the likelihood of you finding a phase 2 being more than 2 months old is very rare, but it's still possible, right? So you can. But personally for me, I just put 2 months. Again, you can play around with it. You can always test different things. This is just from my personal experience and from what I personally done. Just because I'm doing it this way doesn't mean you add an extra 0 is going to be wrong. That's not the case. Okay? Then what I do is complete transparency. All I literally do is open almost every single coin and just start looking through them, right? Like I will hold command on my MacBook and just click, and then it will just start opening tabs, as you've seen me do at the top, right? And then I'll start looking through them and to see which ones could potentially have a phase 2, which ones have potentially already had a phase 2, right? So the good thing is as well is with Dex Screener is a lot of the time if you mark a chart, it will stay marked. So for example, this was actually marked from one of the last videos that I did, and it's stayed marked since then. And what you could even do, for example, like, you know, we established that this was potentially the phase 1. Now, what you can do is, let's say now we expect this to, like, we expect that this phase 2 is basically already died out, right? Did a phase 1, done. Did a phase 2, basically done now. Now what you could potentially do for future reference is right here something like phase 3, right? I'm not even going to write it because it's going to take too long. It's going to waste time. But you can write something like phase 3, right? Where now, if you ever come across this chart again and you see like phase 3 question mark, you're like, oh, I already looked into this coin. Maybe it could do a phase 3, all right? But again, this in itself is another way for you to determine whether this could do a runner. And now how I would then do this is, let's say for this coin, for example, and I know I'm jumping ahead because now I'm talking about phase 3, but like me knowing that this has already done a phase 1, it's already done a phase 2, I can literally set an alert, and I'd recommend you do this on your phone, not your laptop, because you're mostly on your phone more than your laptop. But set an alert for when this crosses a certain market cap again. So if you click alert, obviously I don't do it on my laptop, I always do it on my phone. But if you click alert, you can mark an alert where if it crosses over, let's just say 4 million market cap, it kind of triggers you to know that, oh, this could potentially be reversing, right? So that's what you want to do. So that if you ever, like, because again, a phase 3 can come out of nowhere. Right now it's December, but a phase 3 could come literally in like February. And you don't want to miss out, because a coin like this, where it's dumped all the way to 2 mil from 24 mil, I guarantee you, if this does a phase 3, it's probably going to go to like 100 mil. And you don't want to miss out on a potential 50x, right? So take that into account, okay? Now, if we just go through a few of these, this is what I would personally do. So for example, this one, I'll be honest, it's not really giving me any like phase vibes. Like, again, this, I'd say it's still in phase 1. Like, it's still in the first week of launching. This could potentially just be its phase 1, right? But then again, when a chart can last this long in this healthy of a chart movement, it's a good sign. So what I would do is I'd actually copy this and look into getting into this potentially on a dip by going on Axiom and doing all the analysis that I'm going to show you obviously later on, right? And as you can see, it is actually number 1 on here. So again, this could be a potentially good coin. The good thing about using these filters as well is you might actually find good phase 1 coins as well, all right? Second one is this one, for example, Hachi, right? Let's look into this. Now, obviously in this video, I'm just showing you how to find them. I'm not going to go over like analysis and so on and so forth, but I'm just going to show you like things that I'd pay attention to. So as you can see here, this basically already did a phase 1 because it's been out for almost a week or over a week, and it went to like a mil, right? Now, imagine I spotted this coin after it died out around here, and I set an alert where it crossed like 500k. I'd be like giving myself an idea that, oh, this could potentially actually do another run, a phase 2, right? And maybe I would have gotten around like 400k. That's easily a 10x because it went to 4 mil, right? These were the points I'd probably looking to get into. Something like here, something like here. Again, but this is what I'm saying. Like, the reason why these filters work is because, as you can see, from 27th November to what, 11th December, that's like 2 weeks and a bit, right? Now, by me setting these filters of minimum 72 hours, max 1440, I would have seen this. So this is exactly what you're trying to do. So you should get into the habit where like every 2 to 3 days, you're trying to look for phase 2 and phase 3 coins. Because this is the thing, 99% of the market are on Axiom trying to look for the newest plays. No one's actually looking at these phase 2 runners where these are actually where you can make the safest bets and the safest calls, right? And you're going to have an edge in the market. So always pay attention to actually looking at potential phase 2 and phase 3 runners. Again, if we go into, we already looked at Franklin. Let's look at this now. So this coin, for example, launched 3rd November. 2 weeks later, went to about 16M. I'll be honest, you could say, I'd probably say, I'd need to zoom out because we're on a daily time frame actually. Let me go into the 1 hour time frame. So you could say this was a phase 1 or this whole thing was phase 1. It didn't really flatten out. But I wouldn't consider the whole thing a phase 1 because for this to be a phase 1 is just way too long, right? I'd probably consider this part here a phase 1, like this part here, because as you can see, it kind of bottomed out here and then it went. And this is the thing with bottoming out, right? It can bottom out for hours. It doesn't have to bottom out for days. It could bottom out for a few hours and then start to run again. Because as you can see, volume died out. And it's almost like the market is tricking you to think that this coin is going to die out. Like, think about it. The people who sold around here, these red lines here, these are all people that got tricked into thinking this coin is going to die out. And little did they know, next thing you know, it went up to 22 mil. Imagine how you would feel if you missed out on a coin that went from 2.5 mil to 22 mil. That's literally almost a 10x. That's like 8x, 9x, right? And then again, it went up to 60 mil. So again, you don't want to only look at coins that could potentially be dying out in hours or days. In days. You can always look at coins that are dying out in hours as well, all right? So again, this is a point you could have gotten into. This is phase 1. This is now phase 2. I wouldn't even consider this like, this is too short of a time span for it to be phase 2 in my personal opinion. Plus it hasn't died out. I think this is just normal chart movement. As you can see, it did like an uptrend and then it did a normal downtrend and then it reversed back into an uptrend and now it's back in a downtrend again. Potential reversal here. I wouldn't be surprised if, like, as you can see, this is a downward chart, but as you can see, it does reverse here. So I wouldn't be surprised if it does this now. Like, it could just potentially go up from here, but who knows? We'll see. But again, if this was to die out, for example, right, this could literally go like this. I'd look into potentially seeing a phase 3 of this, and then that could go crazy. That could go to the hundreds of millions, right? So this is exactly what you're trying to look out for, right? We go to Xmas here. So this one, I mean, this is concerning. I'm assuming they've tried to CTO it here. Again, I haven't analyzed this or anything like that. I'm just going purely based off chart. We went to 1.6 mil, huge dump. And it's showing signs of potential reversal. Again, this is something I'd probably set an alert for. Now, one thing I'd recommend is if you're looking at a chart like this where you see it potentially trying to reverse, but it didn't really do much, a general rule of thumb is if it can climb to at least half of where it was before, that's a good sign that it could potentially become a phase 2 runner. So for example, and you don't want to apply this to every single coin, by the way, because you're going to always end up getting in later than you could. But for some coins like this, where it's shown signs, but it's like, you don't want to get in case it actually just dumps, right? What I would then do is I'd set an alert where, okay, the max I went to is 1.6 mil. I want it to go to at least 800k for me to take this serious. Because think about it. If this type of coin manages to climb back up all the way to here, what is the chances of it doing something like this and then something like this and then something like, and then flying after that? It definitely can. It definitely can. Now, one thing about this coin in particular that you need to pay attention to. Right now we're in December, mid-December. This is an Xmas related coin. So what do you think is going to happen once Christmas is gone by? No one's really going to, this coin's going to be irrelevant. So personally for me, I wouldn't even pay too much attention to a coin like this, because once New Year's Day is gone, or you know, the December season is gone, this coin is going to be irrelevant and inevitably it's probably just going to die out. So that's something to take into account as well. If it's to do with narratives or like actual seasons or trends, take that into account, that it probably won't go into like a phase because it's not evergreen. It's not something that can actually last the test of time. All right. Next, if we go on to this coin, let's see. This coin has been out for just about a week. I would say we potentially just seen a phase 1 where it went up to like 3 mil. Again, for me to look into this and think, okay, cool, could this potentially reverse? I would look at it potentially going to like 1.5 mil. Again, this is just one of those coins where it hasn't really flatlined. It still could potentially flatline, and that's why I probably wouldn't get into it, because I personally see it doing something like this again and then flatline. And if it was to reverse, it could potentially go up to 1.5 mil. Or you could look at like the previous support and resistance. So previous support looks like it's something like this, right? As you can see, bounces here, bounces here, bounces here, bounces here. It even bounced off it here. So this is the new resistance, because as you can see, it bounced here. So what I would then look is, can it break that new resistance, which is that point here? All right. Can it break this line here? If it breaks this line here, I then look into it potentially going into a phase 2, right? We already went over this one. Lastly, this one. Again, this one, look. This could potentially go into phase 2. Who knows? It's showing signs. I would never get in this early though, right? Again, you want to look into a potential resistant point where it could potentially cross. Now, again, this went up to like 1.5 mil max. Realistically, that is just like the top of the wick. So it kind of went to like a mil max. So what I would do is I'd see, can it break 500k again? Can it actually break this point again? Because this is the previous resistance, as you can see. So if it can break this point, then I'm more interested in potentially getting into it or looking into it more. So again, just set alerts. Alerts are going to be your best friends. Your best friend. You're going to be like minding your own business one day, and one day you're just going to be driving or whatever you're doing, and you're just going to get an alert. Oh, G just crossed 500k. And you'll be like, what? Like, this coin's running. And then you're going to go look into it, and then you're going to potentially get in on a coin that has died out, that no one has found out about. And by the time everyone's found out about it, it's already at like 1.5 mil, and that's when the drive starts. That's what happens with most of these coins, right? You look at it, like, show you an example, for example, right? Like, look at this coin. Imagine someone got into, so let me show you a prime example, all right? This coin, for example, phase 1 went up to about 1.4 mil, 1.2 to 1.4 mil. So, as you can see as well, the typical like support point was around here. Like you can see, it bounced here, bounced kind of here, and then here it kind of treated it as a resistance. So you could say like 600k, which is again around about half of where it went to, right? So now, if this died out, what would you have done? You would have said, okay, cool. If this goes to 600k, I will look into it. So you would have been alerted at this touch point here. So now you would have probably kept an eye on it, and you would have seen it break, and that's your confirmation. Okay, cool. You know what? This could potentially do a phase 2. Now imagine you got in around here, right? 800k. You got in around 800k, while everyone else who didn't set an alert, who has no idea this is going on, hasn't gotten in yet. This is probably where they're going to find out. Maybe 1.5 mil, 2 mil, and that's when it starts to fly, as you can see. Bro, if you got in at 800k, you would have run it all the way up to 12 mil, which is what? Like a 15x? This is exactly the kind of opportunities you're trying to look for, okay? And then lastly, you got something like Kermit. Again, as you can see, like, my markers are still here from ages ago, right? Same thing with Kermit. Look, phase 1, right? Phase 1 right here. What did it do? It treated this as this was the new resistance, went up to about a mil, treated halfway point, which is like 500k, 600k as the resistance. You'd mark that as a potential point to look into it. Boom, as soon as it breaks, get in around here. By the time everyone's found out, it's probably at like 1.5 mil or wherever it may be. And then you would have ridden it all the way to 4 mil, right? From 600k, 500k all the way to 4 mil. And who knows, this could potentially do another run, another phase, like a phase 3, right? Certainly looks like it. It hasn't really bottomed out, to be honest. I wouldn't be surprised if this continues running. Who knows, right? This is exactly what you're looking out for when it comes to looking for these phase 2 coins. If you have any questions, let me know. I'll see you in the next video. In this video, I'm going to be showing you how to find phase 3 coins. Now, similar to the last video, I'm not going to be showing you how to analyze or anything like that. I will briefly go over like what looks like a good phase 3 coin versus what doesn't. But what I'm trying to show you in this video is how to actually come across them. So once again, for phase 3 coins, we're going to be using Deck Screener. Now, the filters don't change that much, but I'm going to show you what I personally do when it comes to looking for phase 3 coins. So what I do is, and also I just want to add as well, like, I look for phase 2 and phase 3 coins, like, more or less at the same, not the same time, but like on the same day, because I don't want to miss potential opportunities. Like, I don't just hop on and be like, oh, you know what, today I'm going to try find a phase 3 coin. It doesn't work like that. Like, you want to make sure you look for phase 2 and phase 3 coins back to back, so you don't miss anything, because you could come across something that is about to go into phase 2, but because you were looking at phase 3, you missed out on it. So obviously in the last video I showed you that my filters were 72 hours to 1440, right? What I do now, and there was no like maximum market cap, but what I do now is I put minimum pair age 720, and I don't have a maximum amount of hours. Now obviously you're still going to see some coins that you saw on the phase 2 filters in this one as well, but this basically eliminates all the coins that are between 72 hours and 720 hours old. So that's basically anything that's less than a month old, right? And the reason why I do this is because a lot of the time phase 3 coins tend to be older than a month, right? But again, I'm not ruling out anything, hence why I always look at phase 2 coins and phase 3 coins that is on the same day, right? So these are the filters that I personally use. The reason why I do maximum 10 million is because anything that's above 10 million already, the upside potential isn't, you know, it's not crazy. Yes, you can get a coin that's at 20 mil and it goes to 200 mil, but what's the likelihood of that happening? And for a 10x, like, the risk isn't really worth it, because a 20 mil coin could go down to like 6 mil, could go down to like 7 mil, and then you're almost 70% down. So I'd rather look for something that's at like 10 mil max, and then I scout from there. So what I do next is, you'll notice in the last video, obviously I said I rank by trending 24 hours. What I do here though, is I will start to filter based on what's been most active in the past 24 hours. What has moved the most in the past 24 hours? Because what that tells me is that, okay, this coin has had a significant amount of movement in the past 24 hours, right? Now, it also depends on how often you're doing this, because the more you do this, the more likely you are to come across a phase 2 or phase 3 coin. Like, even if you just do this once a day for like 5 or 10 minutes, you are going to come across something. If you do it only once a week, you're less likely to come across something. Because again, as I said in the last video, there might be a coin that moves a lot in one day on like a Tuesday, and you actually don't check for them on Tuesday. So then Friday comes around when you actually do go to look for phase 2, phase 3 coins, and nothing's really active. But you missed out on that Tuesday sign, right? So you need to pay attention to that. So you should be doing this quite often. Now, again, once I do this is I will start to hold command and just click each and every single one and open a new tab of each and every single one, as you can see at the top, and I'll start to look through them. Sometimes I'll even do based on the past 6 hours, same thing. Because a lot of the time, what could happen is a coin might not actually show that it's done well in the past 24 hours because it might have done 100% but then gone down like another 50%, and it might not come up in the past 24 hours as a high percent. So you need to pay attention to that as well. All right. So now, what do? Go onto here, start looking at the tokens, right? We already looked at this in the last video, so I'm not going to use this as an example. So what I'll do is I'll go through each and every single one, and I'll tell you what my thought process is behind it. Now, of course, as I said, there is more to it than just the chart. The chart does give you big hints, obviously based on like price, chart movement, and so on and so forth. But you also want to kind of relate it to what could be a reason why this continues to move, right? Or has a phase 3 or a phase 2, whatever you're looking for. Okay, so this coin, for example, as you can see, it went up to about 1.4 mil. I would consider this as phase 1, this run here. I wouldn't consider this one, even though I've been looking at it, but it's like the fact that it only went to like 400k over the space of like 24 hours. I wouldn't necessarily call that a phase 1. It could be, because we are looking at the 1 hour time frame, but personally for me, I just think this whole thing is a phase 1, because that's when it actually dies out. And as you can see, it actually tries to recover, but it failed to. So if I'm being honest with this, I don't really have confidence in it. However, what I would do, once again, if I don't want to miss out on a potential phase 2, I would say, because this is not phase 2, what I'd do is I'd set like a alert around 500k, and then if it can break 500k, or even if it can touch it again, that will alert me to think, okay, cool, you know what, this coin, I saw it last time, it could potentially make a run. Because again, what it could do, it could go up to here, start bouncing off here, testing this resistance, then it breaks it, and now there's the new support. And then what happens when there's new support? 1 million then becomes a resistance, right? And at least from there, you can make a 2x, and then it could potentially just fly, all right? So that's something to pay attention to. So yeah, this is what I'm kind of getting an idea of from this, just purely based off chart movement. If we go on to Gork, so once again, I am looking at this one on a daily time frame. Now you can look at it through hourly or daily. It really depends, because a lot of these old coins, if you're on an hourly time frame, again, you're going to need to keep scrolling for a long time, and that's not really what you want to be doing. So what I would do is, depending on the coin, I'd look at it at a 4-hour time frame or a daily time frame. All right. The reason why sometimes you want to like look at it at 4 hours, not only one day, is because with 4 hours, you can get a better idea of whether it had a phase 1 or not. Sorry, whether it had a phase 1 or 1 and 2 or just a phase 1. Because if I go into the daily, right, look at this. This just looks like a phase 1 in itself, right? Because there's not much gaps. There's not much like anything dying out or anything like that. But you need to take into account that this launched on the 1st of May. A phase 1 won't last like a whole month, right? It shouldn't, at least. So if we go into like the 4-hour time frame, or even if we go into the hourly time frame, yeah, you'll start to get a clearer picture that, okay, cool, you know what? There we go. Look, so you know what? This is probably the phase 1, right? Because from 1st of May for about a week, which again is usually the general amount of time a phase 1 runs max, it's done a run. It went up to like 4 mil, started to die out here, then it reversed, and then it went up to 8 mil. That you could consider a phase 2, right? Now is the opportunity for a potential phase 3, okay? And as you can see, it's starting to revive itself. Is it giving me signs that it could go back up? Who knows? It is gradually climbing back up, but not enough for me to think, okay, cool, this could potentially do a runner. If I see a break a mil, again, with this sort of token, again, I love setting alerts, because alerts just give me a reminder to look at this coin again in the future. Because if this breaks 1 mil, then I can start to look at it again. Is it using 1 mil as a support? Is there anything in the Twitter that is telling me that this could potentially run even further? So on and so forth. All right. Once again, let's go into this one. Monero-chan. So this one we're looking at an hourly time frame. Personally for me, so launched 7th November, went up to 11 mil by 15th November. I personally think this was probably a phase 1 in itself, right? Even though it went all the way to 12 mil, I just still think it's a phase 1. As you can see, it didn't really die out. I wouldn't consider this dying out at all. I think this is a phase 1, and we could see a phase 2. Like, again, the next possible step is a phase 2. What would I do here? Same thing. I'd look at somewhere around like the halfway mark. Even though it went to like 12 mil, I'd say 5 mil is a good point, because especially because it treated it as a support at one point, as you can see. Bounced off here, bounced off here, bounced off here, bounced off here, bounced off here. So if it can touch 5 mil again, then I'd start to look into it and potentially see if it could break 5 mil. Then we could look into potentially having a phase 2. All right. This one here went up to a mil. This is extremely clear that this is phase 1. So clear, right? Has it done a phase 2? No. Has it attempted to? Yes. What is the clear, obvious answer to do here? Again, you can see it's literally failing to break 400k. I personally think if this breaks 400k and can stay above 400k, it can do a phase 2, right? And it has a evergreen narrative, absolute cinema. Like, it's an evergreen narrative. It's not something like Christmas or Halloween or something like that. It's something that can actually last the test of time, right? Santa coin. Let's see. So we're on a 4-hour time frame. Let's just see if this is a phase 1. So 7th October, about a week. You could say, yep, phase 1. Actually, no, never mind. I would have said this is a phase 1, but the fact that it only went to 200k is throwing me off. I don't like coins that only go to 200k for me to consider them a phase 1, for them to only have gone to 400k next. I would still consider this whole run as a phase 1. And I'll be honest, these type of coins, number one, it's a seasonal coin. It's to do with Santa. And number 2 is it barely did anything. Like, it didn't even get to a mil in phase 1. And it's already been like, what, 2 months or however long it was since it last launched. I don't really have much confidence in this, right? And there's no reason for this to go crazy. You know, right now in December. Is this really going to go crazy in like January or February? Probably not, right? So I personally wouldn't look into this. Like, I as much as I could still set an alert on this, it's like I would rather keep my mental bandwidth intact and not have to have focus on so many different things. But again, you always can, right? It's up to you. But I just X that. This one here, cool. Phase 1, you could say this was pretty long ago though, like January 2025, right? This is one that I'd question as to whether we would see a phase 3 anytime soon, because the fact that it did a phase 1 in February/January, and then it died out ever since all the way to about October, November. When are we likely to even see a phase 3 if we are, right? Because it didn't even do anything significant here. It kind of went to all-time high and failed to break it, and now it's back down to 6 mil. Could it possibly do anything crazier? Maybe. But to play it safe, what I would do here, I wouldn't pay too much attention to it, like overthink it too much. I'd just set a what's it called? An alert, right? I was going to say I'd set an alert at the all-time high, but I just realized that the all-time high was 25 mil. Like, what are you going to get out of setting one at 25 mil? What I'd probably do is around like 10 mil, because that is a very significant psychological point. And then, yeah, just see if it actually hits 10 mil or not, and just move on. Like, again, this is the thing. Like, you're going to find the reason I'm telling you, like, I'm trying to get you to get in the habit of just moving on to things that you're not confident in, is because you're going to be doing this so often, where you're going to need to get into the habit of not trying to take every single coin seriously, because you're going to overwhelm yourself too much. You only want to kind of focus on the ones that could, like, are giving you clear idea, oh my god, this could actually be a phase 3 runner, which I'm going to show you in a second, right? Like, I actually have one that could potentially be one. But yeah. Okay, so there's this one here, cat with mask. Again, let's just see. This was very, very long ago, May to about June. Could this run again? Potentially. Is it giving me signs that it could? Like, would I consider this a phase 2? No. This one's a bit weird. This one, I would, personally for me, I'd just skip this one. It just doesn't look like it's been able to even revive second time round. Could it revive? Possibly. Am I going to ignore it for now? Yes. Don't forget, guys, like, if you're always checking on these time and time again, it's not like you're never going to come across this again. So, like, even if you just ignore this one now
and next week it starts to move, you're going to see it, because you're going to be doing this filter stuff every other day or every few days. If you're active with it, you're going to see it again. All right. Okay. I think this was the one that I was going to say. Yeah. So I think this is the one that I said could potentially do a phase 3. And you could probably see as to why I think that. Because this is a very old coin, first and foremost, right? It went to a mil at phase 1. You could say this is a phase 1. Could you consider this a phase 3? I personally think like this together is a phase 2. It has died out a bit, and we are looking at the daily time frame. So could this be a phase 3? Maybe. But a lot of time when you see phase 3s, and from the examples I've showed you, they go crazy. Like, usually, this is what a phase 1 looks like a little bump, and then it goes like this, and then like this, and then a phase 3, as you guys have seen, it will be like this. So like, for this to have only done like a very small like jump, kind of shows me that there's potentially still room for another phase 3, especially the fact that after about however long it's been, like this ended back in February, and now in December it's starting to pick back up. That is a good sign. To 2.5 mil from like 200k is a good sign. Now again, I'm not even going based off analysis or anything like that. It's purely off chart. If we go into analysis and look into the Twitter and so on and so forth and see what could potentially be making this run, we could potentially be looking at a phase 3 on our hands. And again, the fact that this already went to like 10 mil at one point, you could easily see this go into like 40 mil, 50 mil, so on and so forth. That's easily like a 20x. All right. Now, these ones that I've put at the end are just to show you kind of like bad examples, you could say. So this one, for example, as you can see, it ran a bit in September, and you could consider this potentially, because I'm looking at the 4-hour time frame, you could consider this as like a phase 1, because it went to like 800k, died down, then it started to run again. You could even consider this whole move as a phase 2, died down, and then a phase 3 run up here to 30 mil. And now it just looks like it's dead, right? Now there's no signs of it even returning at all. So this one, for example, the reason I'm showing you this is because I personally think this one has already done its 3 phases, right? You look at this one here, for example. I mean, it's been out for quite some time here. Like, this whole section here is phase 1 in my opinion. Then you've got a little phase 2 run here, and you've got a little phase 3 run here, right? And if you look at it, like, the bumps are pretty significant, right? You got this little bump here, little bump here, and that's whether you want to consider this a phase 2 or this a phase 2 or both of them together. It's completely up to you. You could even consider this a phase 2 on its own. To be honest, it only lasted a few days, so I'd give it a bit more time. Like, let's say this is a phase 2 and then this is a phase 3, right? Went up to all the way to 40 mil, right? But again, who knows? But I wouldn't pay attention to this unless it does like a significant bounce back. This would have maybe made me think, oh, could it potentially do something, because it went up to like 4.5 mil. But again, it clearly failed to break the previous support. As you can see, the previous support was around like 4.5, 4 mil, whatever it may be. As you can see, it bounced here, kind of bounced here, you could consider, so on and so forth. And ever since it dropped below, it hasn't been able to break it again. If this broke it, I would have started to think, okay, cool, you know what, this could potentially do a phase 3, but it didn't. All right, this one here and this one here, I'm going to analyze them both together. These are not something I pay attention to because they've been out for so long, 16th November to now. And number one, it's barely even done a run in the first place, right? This is not a phase 2. This is not a phase 1. This is probably all a phase 1 in itself. And for it to only go to 500k, 400k in, you know, the space of however many weeks, 3 weeks, whatever it may be, is a bad sign, right? I don't think this is returning anytime, anywhere. And it's Santa related. Have you noticed, like, all the Santa coins, especially around this time of year, they don't really do well, because Santa coins tend to do better like on the build up to Christmas, which, don't get me wrong, we're not even at Christmas yet, but like the closer you get to it, the more they die out, because people realize, oh, like as soon as Christmas comes around, it's gonna die out. I don't want to take a risk in being involved in it, right? Same thing with this one. Like it didn't even break 500k. The likelihood of this doing anything crazy is very, very low, right? And yeah, it's called 2026-7, like it's a good trend and it could be something evergreen. But like, unless it does something significant, it's only at 150k right now. Again, I would personally just set an alert at, let's just say 500k. If it breaks 500k, I'll be interested. And I can't lie, if this does break 500k, because of the kind of like trend it's trying to hop on, it could potentially do well. But based on the chart itself, it just doesn't look clear. All right. But anyway, guys, hopefully that helped. Hopefully that made sense. That's how you find phase 3 coins. And that's kind of what I go through in terms of like just chart analysis, looking at the chart, giving myself signs as to whether or not something could potentially go into phase 3. If you have any questions, let me know. I'll see you in the next video. Take care.
In this video, I want to be speaking about buying the dip. Now, I don't necessarily mean the dip as in like a reversal or buying like the massive dips. It's more about just understanding where to enter in a coin and how to actually understand dips. Because I've noticed a lot of people, and you are probably included in this, don't actually understand how to buy dips or even how to get into a coin in the first place, which should be on a dip, right? If you are active in my private call group, you know, this crypto house, you'll know that I always say don't top load, or I'm not top loading, I'll wait for a dip. Now in this video, I'm going to show you exactly what I mean when I say I'm waiting for a dip, or how to buy into the dips, how to not get burnt, and how to not mistaken a dip for a dump. Okay, so let's use this coin as an example. Right now, one thing I want you guys to understand, right? Again, I'm not going to go over reversals in this video. There's already a video for that. But one thing I want you to understand in this video is time frames. Time frames matter so much, to the point you probably don't even realize. Like, a lot of you watching this video right now probably stick to like 1 or 2 time frames max. Maybe the 1 second and the 1 minute, or the 15 second and the 1 minute, or I don't know. If you are not using at least like 4 or 5 time frames, you're doing it wrong. And it also depends on the type of coin. Like, I don't expect you to look at a 15-minute time frame for a coin that's only been out for an hour, because you're only going to see 4 candles, right? But for a coin that's been out for a couple of days, you shouldn't only be looking at a 1 minute time frame or a 15-minute time frame. You should be looking at it from multiple different time frames, because it will paint you a far bigger picture than just 1 or 2 time frames. All right. Anyway, let's cut through the fluff, and I'm going to show you how I would have gotten into this coin at different levels. Right. So typically with a coin like this, let's just say I called it around 170k, right? 190k. Let's just say I called it at this top right here. And I said to you guys, listen, I'm not going to top load. I'm going to wait for a dip. Now, a lot of the time when people hear that, they probably think, oh yeah, he's probably going to try and wait till it goes back down to like 100k for it to then run again. Like, no, that's not the point. The point is that I'm just trying to minimize my risk as much as possible for me to be a part of the continued run. Because why on earth would I be wanting to get into a coin that I don't believe is going to go up anyway? For me to have to wait for it to go 100k, like, I mean, if a coin was to go from 200k back down to 100k, like, I'd be quite concerned. Like, why is it so volatile, right? You wouldn't want to get into a coin like that. You would want to get into a coin that dips like minimally, because then it gives you assurance that, okay, cool, this coin has a lot more potential to move up, right? And this is like, when I explain these videos, you're going to realize how simple it actually is, especially with coins like this where they have actual structure. And if a coin doesn't have structure, you need to ask yourself why, right? Why is it so unstable, right? What about this coin, and obviously we're going to go over analysis and whatnot if you haven't already, but what about this coin is making people not believe that it's actually got the potential to run, right? Dips are inevitable, don't get me wrong. Like, don't think, oh, just because a coin is dipping, it means people don't believe it and so on and so forth. There are bad traders out there. There's traders that don't know what they're doing. There's traders that panic. There's traders that got in early and are trying to clip and trying to get out and so on and so forth, right? But anyway, look, let's just say I called it around 190k, which is here. And, you know, I said to you, listen, get in on a dip and ride the coin. What are you going to do? You are going to establish the trend at first, right? So the uptrend essentially starts from here, right? Now, you might think, okay, this is the uptrend here, 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 here. No, I'm not looking at that. That is way too short of, like, that's too short of a, not time span, but the spread between the trend, it's just too short. Like, you understand exactly what I'm saying. What I'm looking at is I'm looking at the bigger trend, the bigger time frame. So look, I'm looking at it like this: up, down, up, down, up, down, up, down. Right? Notice how, like, it makes a lot more sense that way, because if you do it that way, you're not going to get confused by these small little trends in between. Because this is the thing, this is why a lot of people get confused when they look at a coin like this in a 1 second time frame, because what they're seeing is they're seeing like huge reversals, and like they're seeing, they can't even see a trend. Because if you look at it from a very smaller time frame, I'm not going to go on a 1 second because it's going to make it such a small chart, such a long chart. But like, look, if we were looking at it from a 1 second time frame, you'd be seeing, okay, uptrend here, goes all the way up, and then oops, it's going back down again. Now, don't get me wrong, like this is literally an uptrend, this is literally a downtrend on the 1 second time frame. The only time this will work for you is if you're aiming to scalp, right? If you're aiming to catch wins like this, where you're trying to get like 30% wins, or however many small wins you want to get, whether it's like 50% wins, whatever it may be, cool, that will work. But I'm pretty sure you watching this video right now, you don't want those kind of wins. You want 200%, 300%, 400%. For you to do that, you need to look at coins in a bigger time frame. That doesn't mean you need to switch to 5 minutes. You can, it'll be a lot clearer. But for a coin like this, you can clearly see it on a 1 minute time frame. So for example, if you wanted to get into a coin that does an uptrend like this, where it's big uptrends, you need to look at it from a bigger standpoint, right? As you can see. Okay? So back to the question. Where would I have gotten in if I called it 190k? Well, I would have gotten in on one of these two dips, right? Probably this one, because, you know, as soon as it's starting to dip, I'm like, okay, cool. Could potentially reverse here, especially because it's showing signs of reversals. All right, cool, I'll get in here. Now, what I wouldn't have done is started to panic when I see it do this and then go back down here, because a lot of you might think, oh, like now it's going back into a downtrend because it just made a lower low. Well, no, because you are looking at this lower low. Sorry, you're looking at this previous low, right? Not this one, because remember, we're looking at it from a bigger time frame, right? The move is only invalidated if this coin was to go like this and then down, and it continues going below this previous low. That's when you start to question, okay, cool, you know what, it could potentially go down. And even then, not for this coin in particular, but even then, you could even look at it from a further bigger time frame. But I don't think that applies for this coin in particular, because there isn't enough for that to potentially happen. Like, you could have looked at it from like, okay, cool, maybe this is the uptrend, all right, this, and then this, and then this, and then this. Yeah, you could do that, and it will work. But I think it only works depending on how long the coin has actually been out. Because as you can see, it still works, right? If I go onto the 15-minute time frame, for example, right, you'll see that the lines literally match up to show a very clear uptrend, as you can see. Like, if you saw a coin like this, you would not expect it for it to be potentially gonna dip at all. Like, not at all. Like, you wouldn't expect it at all. Like, it's so clear. That's why other time frames are important. If we go into the 5-minute time frame, right, very, very similar thing, right? Where did it go? So, very similar thing. It is extremely clear. And when you look at coins like this on different time frames, it gives you better like idea on what your entry should be, right? Because now you're looking at it, okay, cool. And this is something you should do as well. If you're looking to get into a coin for like, not necessarily long term, but you think it's got potential to go to like the millions and so on and so forth, look at bigger time frames and look like, okay, cool. It was at 190k, which is this, right? This small dip looks like nothing now, right? Because you're looking at this now, right? So you would have gotten in anywhere here, and then you would have ridden it up, right? Where do you set your stop loss? Well, you set your stop loss below the previous low, because you now know, okay, if it breaks this and it goes like this, yeah, it's probably going to start a downtrend. Now, don't get me wrong. Again, like, as much as I'm saying this now, things happen in meme coins that people don't expect, because, again, there are different catalysts to meme coins. Like, a tweet could come out all of a sudden when this coin's on a downtrend, and then this coin could just shoot up, and we have no control over that. But when it comes to the chart itself, you need to have ultimate control over what you know and what you can see, not what you don't know, right? And as far as I know, from what I can see, this isn't an uptrend and it's going to continue going up, and it did. Now let's say for example, yeah, cool, call that 190k, and let's just say you got in at, let me just draw a line. Let's just say you got in at 160k, right? We won't say you got into the complete bottom, but we won't say you got in here either. Let's just say 160k. Now, if you was to just get in at 160k, and you was to ride it up to, let's just say 800k, for example, right? That in itself, I'm just gonna do 165. That in itself is a 400% almost, like 400% basically. To 855k, 4.5x or whatever x that is, just off catching a small dip. That's exactly what you're trying to do, right? That's exactly what I mean when I say buy the dips, all right? Take that into account. When it comes to you getting into coins and buying the dip, and I don't mean reversals, reversal is a different video, but when it comes to buying the dip, this is exactly how you do it. The main takeaway from this video should be to look at different time frames, all right? And don't overestimate like chart movement on certain time frames. Always expand and try to look at it from a further bigger time frame. Okay, any questions to do with that, let me know. See you in the next video. In this video, I'm going to be showing you how to spot a reversal, but also this will fit in to establishing the next phase, right? A lot of the time, this is what happens when a coin is about to go into like phase 2 and sometimes even phase 3. Now, I would say this one in particular, the example I'm about to show you, is more for short-term reversals, just because you'll notice that with coins that are like going into phase 2, phase 3, the time span is a lot longer, so it's harder to spot than this. So for example, I'm on a 5-minute time frame here because this has only been out for, you know, a few days, whereas a phase 2 coin would be out for like, you know, sometimes weeks. You know, the time span will be a lot longer. You won't be able to look at on a 5-minute time frame. So for what you watch in this video, a lot of it will be applied to shorter term coins, again, coins that have been out for a few days and so on and so forth. So what I want to focus on is the fact that this coin has done its first run, you could say phase 1, over the span of, let's say, 2 days. Then it started to dip and die out, and then all of a sudden it started to run again. Now, in this video, I'm going to be showing you is how you could have gotten into this and what the smartest way to have gotten into this would be and where you should have bought. All right? So, let's say you're looking at this coin and you've seen it around here, right? You've seen it after it started dipping, and you know, after doing your analysis, after looking at the narrative, you feel like this has potential to run. Or maybe you're being told it has potential to run, so on and so forth. How do you know when it's going to reverse? Right? Well, firstly, you're gonna want to establish what like trend it's currently in, right? So clearly, if you're looking at it here, it's in a downtrend, right? You can see the staircase formation going down. Now, if it is unclear, you do want to check different time frames. So like, you know, for example, on a 1-minute time frame, you can clearly see this is an uptrend. Up, down, up, down, up, down, up, down, right? High, low, high, 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 low, high, high, right? And if we go to the where we were talking about, which is this section, again, you can clearly see it as well. Like lower high, lower low, lower high, lower low, lower high, lower low, so on and so forth. Now, if you get confused by seeing this, for example, where you're like, well, it does lower lows, lower highs, it kind of goes down, and then it looks like it's going to reverse here, so on and so forth, and like this kind of confuses you here. It shouldn't, because what you can then do is just literally expand the time frame and look at it from a different time frame, and it'll give you a clear answer. Because if you look at it from this time frame, for example, right, this isn't enough for it to tell you whether it's a reversal or not, simply because it hasn't made a higher low, right? As you can see, for example, right, it does lower low, lower high, lower low. Yes, it does a higher high, you could say, but it still goes back down, right? If this did something different, where it did like this, and then it stopped here, and then it did this, that's where you could potentially look in a breaking pattern where it's like, okay, this could potentially reverse now, which is what I'm going to show you, right? Because if we go to the next section here, right? If we go to this section here, it did exactly that, right? Where it started to bottom out. And one thing you want to look for is two things you want to look for is not only a potential reversal, but also where it's bottoming out. So if you notice something, one thing that would have signaled to you that, oh, this has potential to now reverse, is that it literally stopped at a limit of 200k. Yes, it went down a bit here, but I'm going to explain that in a second. But like, you can see it's using 200k as a support. Now, you might be thinking, why 200k, right? Well, because at one point it was a resistance, right? As you can see, it bounced twice off here. So now it's using this as a support. You can tell yourself, okay, cool, this could be the limit. This could be the lower limit. And this is also how you spot bottoms for you to get in as early as you possibly can. Now, does that mean I would have gotten in like here, here, here? Maybe. But if you want extra confirmation, I'm going to show you what you can do. But you can do one of two things here, right? Number one is if you are, someone who likes to take a lot more risk, you could have seen this bottom pattern where it's like, okay, bounce once, bounce twice, almost bounced 3 times. I wouldn't consider this like it breaking support. It hasn't, because it came back up. And then it bounced the 4th time. I personally, if I was a high risk trader at this point, I would have probably gotten in here, because the downside is a lot lower than if you were to get in on a reversal, which I'm going to show you like at somewhere like here or here, because you're going to lose more if it doesn't actually succeed, right? So I would have gotten in here. Now, what do you do in terms of like stop loss is you just set a stop loss at the next resistance. So the next resistance, as you can see, was here, here, here. That's where it was bouncing a lot, which is basically 150k. So all I would have done was I would have gotten in at, let's just say, 200k. And this is one scenario, by the way. I would have gotten in at 200k, and then I would have set this as my stop loss, so that my potential loss is only about 25%. It's not that bad, right? It's not that bad at all. Whereas the upside potential, as you can see, is a lot higher, right? This went from 200k all the way to 1.5 mil now, right? Now, the second option you have is actually getting a reversal confirmation, which you know I speak a lot about in my YouTube channel, which is where you get that confirmation that, okay, cool, the pattern has now changed to an uptrend rather than a downtrend, right? So it goes from a downtrend, as you can see here. It goes down, up a bit, down, up a bit, down, up a bit, down, all right? And I'm trying to use simple terminology so you can understand. Then what does it start doing? It starts bouncing off the exact same point, and it starts consolidating, right? A consolidation is usually a sign that, okay, this could potentially lead to a change in pattern. Now, where does the pattern change? It changes on this move right here, right? Does it change on this move? Not necessarily. It more so changes on this whole move, this one right here, right? Again, you would only see this, and the only way you'd be able to confirm it is if you go on a bigger time frame. However, would I have waited for it to get to here? No. Realistically, I would have probably gotten in here. So as soon as you see it starting to make a higher high from the previous high, where look, like it literally is starting to create an uptrend where it's going like up, down, up, you might look at this and think, okay, cool, let me get in here. And I would have probably gotten in here. Now, where do you set your stop loss? Once again, the exact, not the exact same place. You wouldn't have set it at 150k this time. You would have set it slightly below the lowest low, right? Which is this one right here. Because if it does break this, then your reversal confirmation is invalid, because it would have created a lower low. If this was to break below this, then you're not even in an uptrend, so there's no point even risking any more money, because this would have literally broke this and you're still in a downtrend, right? It invalidates it completely. Whereas if it doesn't break that, it's still in an uptrend, because look, if we look at a bigger time frame, it goes like this, 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 this. It is still in an up, like it's still going up, right? A lot of people tend to think it needs to be like, it needs to be a movement like this where it barely goes down, like, oh, it goes down like this and then up like this and then down like this, up like this. No, that's not how it works. An uptrend could easily just be like literally this, where it goes up in small increments and down all the way almost to make a new low, and then it can fly, which is exactly what it did here, right? As you can see, it is extremely, like, the dips are extremely hefty, scaring retail traders, and then all of a sudden it starts to fly, and that's when you start to see these this better uptrend, you could say, right, where it's a lot steeper. And then this is going into now phase 2, right? And notice this phase 2 right here is extremely short. This phase 1 going into phase 2 is extremely short, right? This phase 2 only lasted about 48 hours. Phase 1 only lasted about 48 hours, and it's already going into phase 2, right? So again, let's just go on a quick recap, right? What I would have done is, if I wanted to get in lower, right? If I wanted to get in if I wanted to predict the bottom, I would have gotten in where it started bouncing off, right? Which is 200k. Okay? Now what I would have done is I would have then set the stop loss at the previous resistance, which is 150k. Okay? And you can tell a previous resistance by looking at where the tops were bouncing off and then the bottom was bouncing off as well. Because as you can see, it bounced off here and it bounced off here. Now sometimes you might get a resistance that only the tops bounced off of, but not the bottom. So for example here, look, 200k was a resistance, but it didn't bounce off 200k after that, right? It just skipped it and it went all the way back up. But as you can see, what then happened, it treated 200k as a resistance level, as a support level later on. As you can see, it bounced here, bounced here. Oh, sorry, that's 300k. It bounced here, bounced here, bounced here, so on and so forth. All right. And then the second thing that I said was, remember, you can or you can wait until a potential reversal confirmation where it gives you signs that, okay, cool, this could potentially be a reversal, where you can see, okay, cool, it's starting to form an uptrend, and then you can either get in here. If you wanted to, you could have waited till here. Again, this is minimizing your risk, right? Minimizing your risk, because if you get in here and you set your stop loss here, the risk is a lot lower. It's completely up to you, and the upside potential is a lot higher. But this is a test of your patience, right? Regardless if you got in here or if you got in here, it's not that big of a deal. Minus 34%, minus 20%, right? Now, the best answer to which one do you go for is you DCA, right? You buy in at different points. You don't have to buy in all at once at only one point, because you might get a better entry, right? You might have not predicted it, and a lot of the time this is what happens, right? You're never gonna get like the perfect entry. A lot of the time, yeah, what people tend to think is, let's just say the chart has not, passed this point. A lot of people, when they see this like reversal confirmation, their instant reaction is like, oh yes, we're like going up now. Like, let me actually draw. Like from this point, they're thinking, oh yes, we're just gonna do this now. We're just gonna do this. Like, it's not how it works, right? The market is always out to get you. The market is always out to get you. It's always out to make you think that what's about to happen isn't gonna happen, or vice versa. Like, what isn't gonna happen is about to happen. For example, here, like, I mean, look. Imagine you were in this run right here, right? Let's say you got into here, you saw the top out here, and then you started seeing this huge dump right here, right? You would have probably gotten scared, and you'd have probably gotten out. But then look what it did. It went up back to 1.2 mil, and then again it did. Now look how much of a trick this is, right? Imagine the people who got into this run, saw it start dipping, and then like, all these people that sold here because they were too scared, and then they started selling and they saw it dipped. And then they saw it run again and they're like, oh my days, it actually went back up. I missed it. Now, when they see this big drop, what are they going to think? They're going to think, oh, it's literally just doing the exact same thing as it did here. Right? Yeah, look, it literally looks the exact same, because it does. Right? Look, it dumped so bad here, and then it went back up here. And again, dumped so bad here, went back up here. They would probably think, yeah, like reversal, it's coming. And next thing you know, they've been tricked, and it goes back down. And then I'll use this exit liquidity. And then again, it runs. The market is out to get you, right? You need to take that into consideration when getting into these coins. But yeah, anyway, that's everything for this video. If you have any questions to do what I spoke about, let me know. See you in the next one.
So you were watching this video because you got into the end of, I think it's the third module, second module, fourth module, whatever it may be. But first of all, I want to say congratulations for even getting this far into the program, because it shows that you've actually been watching the videos and you're not just, jumping from one random video to another random video. And you're probably asking yourself, well, what do I do next? Because the likelihood is that the next part of the program is not open for you yet. And that's done intentionally, because the last thing I want is for you to overwhelm yourself with way too much information that you don't even execute on what you've already learned. At the end of the day, there is so much information out there. Whether you go on YouTube, whether you go on Google, ChatGPT, whatever it may be, you can find a lot of information. Whether it's going to be exactly what I've told you, maybe not in the step-by-step way that I've told you as well, but it's out there. And the common issue that happens across the market, especially in the trading industry, is most people try and learn absolutely everything, but when it comes to executing, they never do. So what I want you to do from watching this video is go ahead and actually execute what I've showed you so far. So if you're watching this, you've probably learned a lot about charts, what makes up a chart, what the different chart patterns are, what phases are, psychological points, so on and so forth. And what I want you to do before you move into the things about copy trading and the things about understanding how to analyze certain Twitters and sites and key opinion leaders and so on and so forth, I want you to understand charts first. And in order for you to truly understand charts, you need to be able to execute on the things that you learned, because you don't understand it until you actually execute on it. You might think you do, but just because you learned something and you know where it is, doesn't mean you understand it. Okay, so what you can do from this video is go into the meme coin market, and whether it's looking at coins that have already ran and actually spotting things like the support and resistance, spotting things like psychological points, spotting the different phases. That's number one, right? And number two is to do it to coins that have not yet done those things. So for example, if a coin has not yet gone into its phase 2, your job is to determine the coins that are going to and see if you're right? See if you can spot the next phase 2 or the next phase 3 coin, right? See if you're right in determining whether a coin actually created a new support level or whether a coin has actually broken its resistance, okay? See if you're right in determining whether a coin has formed a specific pattern. These are things that I've taught you in the past about 10 or 20 videos that you've watched before this, and I want you to actually understand everything that you've learned. Remember, if you have any questions, if you have any doubts, first of all, go and rewatch the video that you have doubts on, because the answer to your question might already be answered. Maybe you just forgot, or come and ask me in our mentorship chat. Okay. Other than that, I will see you in the next section. Take care.
That's a wrap. 4 hours. If you made it to the end, genuinely well done. Most people will not make it this far into the video, and that really tells me something about you. But listen, watching this is only step one. The difference between people who actually win in this space comes down to one thing, and that's execution, right? You can watch this 10 times, right? 20 times, 30 times, but until you're in the charts and applying what you've learned and making decisions in real time, this is all just information, right? So here's what I want you to do next. Go to the link in the description and apply to join the Crypto House on School. It's completely free. You'll get access to all the slides and all the modules, and you'll also be able to ask me questions. You'll also be surrounded by serious traders in there. Trust me, because it's application only, and I handpick who I accept inside. And just by you making it to the end of this video, I want you inside because I can see that you're committed. If you are only there to browse, then it's probably not best for you to join. But if you are serious in taking the next step, definitely get involved. And by the way, if you're wondering where I am and why I'm not in my office, I'm in Thailand, just enjoying life, right? As you guys know, I live in Dubai, but right now I'm in Thailand for a few weeks, just taking the time off. And yeah, other than that, I'll see you guys on the inside.